Okay, good morning everyone. The next chapter we are going to discuss is accounting for bonus issue, bonus shares. Last chapter, right shares. Whenever right shares are offered by the company, how to do the accounting, how to calculate the value of right, we have seen. Now, next bonus shares concepts. First of all, what is this bonus shares is all about? And whenever a company wants to offer bonus shares, what are the provisions they need to comply with, and how to do the accounting? All these things we need to understand. So accounting for bonus issue. See, in this chapter what we are going to learn is, first we'll try to understand what is bonus shares, or what is bonus issue. You can say bonus issue or what is bonus shares. We need to understand first. Second, when a company wants to issue bonus shares, when a company wants to go for bonus issue, what is the effect of bonus issue? Effect of bonus, effect of bonus issue. This is one thing you need to understand, because it is not just simply the accounting. Why bonus shares, what is the effect of this bonus shares is also very important. Next, types of bonus, types of bonus issue, and then sources for bonus issue, sources for bonus issue. These are provisions which is there in the Companies Act. You see, the Companies Act, there is a separate section for bonus issue. Whenever a company wants to issue bonus shares, what sources they have to utilize, what conditions they need to follow, it is there in the Companies Act. I think in law paper you might have covered a share capital chapter in first group. Okay, no problem. Even if you don't remember, anyway we are going to revise it again here. Sources for bonus issue, and then conditions for bonus issue. Conditions for bonus issue. I think in one attempt they have asked this theory question. They have asked, explain the conditions for bonus issue. Sir, in CMA Inter, even if the paper is corporate accounting, financial accounting, especially corporate accounting, theory can also be asked. Even in first chapter also, if you see the examination questions, explain the accounting treatment for forfeiture of shares, explain securities premium, for which purposes it will be utilized, those 5 purposes. Those are the questions they're asking. So don't take theory lightly. Whatever we are discussing in the classroom, even if that much if you write now, you will get good marks. So conditions for bonus issue. So when it comes to conditions, sir, some conditions, conditions are there in the Companies Act, obviously, Companies Act, and also SEBI guidelines. SEBI. If you are a listed company, you need to follow SEBI regulations also. Stock Exchange Board of India, because you are listing your shares in SEBI, right? In order to sell shares to public, we need to list shares in SEBI. So whatever the conditions prescribed by SEBI, those conditions also we need to follow. So conditions for bonus issue, and then accounting for bonus issue. Whenever a company wants to issue bonus shares, the accounting treatment. Finally, the main thing is accounting treatment, accounting for bonus issue. So this is the 6 topics we are going to cover, sir. In these 6 topics, every point, everything will be covered. And see, actually, if you see the CMA study material relating to this bonus issue, they have given some, I would say, special extra points which is not there in other materials. Like for example, CA Institute material you take. Previously, this chapter is there in CA Inter, bonus issue chapter. There, for example, capital reserve realized in cash, any capital profit realized in cash, that cannot be utilized for bonus issue. According to the material, they have not nowhere said that capital profits will be utilized. But if you see the CMA study material, they categorically said that any capital profit realized in cash can be used for bonus issue, and also any securities premium realized in cash only will be used for bonus issue. Like that, some extra points I would say is there in the CMA study material, and we will follow absolutely what is there in the CMA study material, because they have solved questions also accordingly. Okay, now let us start first with the meaning of bonus issue. What is bonus shares? What is bonus issue or bonus shares? Sir, basically bonus shares means the shares which is given by the company to its existing shareholders at a free of cost. Okay, shares given at a free of cost. Shares given at a free of cost to existing shareholders. Basically, this is called bonus shares or bonus issue. Shares given at free of cost to existing shareholders. Now, tell me, generally when we issue shares, we have seen in first chapter, when we issue shares, either shares will be issued for consideration of cash or for consideration other than cash. If you issue shares for cash, you will receive cash. If you issue for consideration other than cash, like purchase of asset, you will receive asset and you will issue shares. For underwriting commission expenses, you will issue shares. We have seen in first chapter. Now, in bonus issue, company is issuing shares to you. You are the existing shareholder of the company. Company is giving shares to you freely. Some shares based on the existing shares, pro rata basis, like how right shares are offered, 1:2 ratio, 1:3 ratio, like 1:1 ratio. For example, 1:1 ratio, you assume. So if a shareholder is having 100 shares, company is now giving another 100 shares freely. You are not required to pay anything. You are not required to pay anything. So shares given at free of cost. Basically, these are called bonus shares. Now my question is, okay, companies giving shares, so share capital will be created. Share capital will be created. Which account you will debit? You are not receiving anything in this case. So bank account will be debited, nothing, no amount is received. Or are you purchasing any asset for that you are issuing shares? No, you are giving shares freely to the existing shareholders. So what account will be debited? Which account will be debited? Sir, here the concept of bonus issue most of the students are not understanding is actually the correct name is capitalization of reserves or capitalization of profits. Bonus issue is technically called as what? Capitalization of profits. This is capitalization of profits or reserves, whatever. See, whatever profits, reserves and surplus available with the company, those reserves are converting into share capital. That's why bonus issue is technically called is what? Capitalization of profits. You are converting the profits into capital. You are converting profits, your reserves and surplus into capital. That is called bonus issue. So bonus issue, what is happening is converting existing profits into share capital. Existing profits into share capital. Okay, We'll discuss why. But first understand the meaning of bonus issue. So in bonus issue, we are not receiving any amount from the existing shareholders. Then how can you create capital in the books? Your own profits you will debit, that will be transferred to share capital. That's why it is called capitalization of profits, converting the existing profits into share capital. This is basically bonus issue. Okay, now you tell me, what is the ultimate net entry we are going to write? Very simple. Reserves and surplus will be debit, equity share capital will be credit. That's it. Correct? Hello? Ultimately, this is what happens in bonus issue, sir. Your capital will increase, your reserves and surplus will decrease. Everybody? Sir, what is reserves and surplus? Reserves and surplus means in the company balance sheet. Of course, we are discussing about a company. We have a separate chapter, schedule 3. In the balance sheet, sir, generally if you are a sole proprietor, when you prepare the financial statements of sole proprietor, liability side first you will show what? Capital. To that capital you will add net profit, na? Net profit. But in case of company, capital will be shown separately. Whatever the profits earned by the company after all appropriations will show separately. That is called reserves and surplus. So reserves and surplus basically indicates what? The profits of the company, the past profits of the company. Of course, this reserves and surplus will consisting of different names, like for example general reserve, P&L account, capital reserve, securities premium, like that different items will come. Okay, from that some reserves we use to convert them into capital. So basically this is what happens in bonus issue. Okay, so tell me, what is bonus shares? First of all, shares which is given at free of cost to the existing shareholders. And bonus issue technically called as what? Capitalization of profits. And that means in bonus issue what we are doing? Converting the existing profits into share capital. So in bonus issue ultimately what is the net entry? Net ultimately what happens? Reserves and surplus will decrease, equity share capital will increase. Now one more thing, sir, because of the bonus issue, whether the net worth of the company will change, it will not change. So you need to understand, no change in net worth of the company. Net worth of the company. Why there is no change? Because your assets and liabilities are not affected, na? Sir, because of bonus issue, whether your assets and liabilities are affected? Hello, tell me. No. Only two things are getting affected. What are those? Your reserves and surplus to capital. Your reserves and surplus is becoming capital. That's it. Your reserves and surplus becoming capital. Therefore, if I prepare the, suppose for example, this is the balance sheet of a company. Okay. First we will show share capital, then reserves and surplus. From this reserves and surplus, some amount, now the amount is becoming this one, share capital. That's it. Hello. So this one is becoming this. So from reserves and surplus, some amount is get converted to share capital. That means there is no change, na? Your assets will not change, your liabilities will also change, not change. That's why there is no change in net worth because of bonus issue. Understand this. Now, from shareholder point of view, sir, shareholder point of view, for example, your Mr. X, sir, you have 100 shares in a company. Number of shares, already you have 100. Now company is issuing bonus shares. Okay, another 100. So now your number of shares will be 200. Hello, you are Mr. X, already you are having how many shares? 100. Now company is giving another 100 shares freely. Now number of shares will be 200. So your value of shares will increase, huh? No, it will not increase. Why it will not increase? For example, you see, number of shares 100, huh? To purchase this 100 shares, suppose you spend 1 lakh. Now another 100 shares came freely. So therefore the cost is 1 lakh for 200 shares. Therefore, what is the average price per share, sir? 1 lakh divided by 200. It will be 500. Previously, 1 lakh divided by 100,000 is the cost per share. Now the cost per share is 500. So, see, as a shareholder, also because of the bonus issue, your percentage will not increase, because like you, every shareholder's value will also increase, na? Like for example, Mr. X 100 shares has become 200. Now Mr. Y is there, for example, he is having 50 shares, another 50 is given bonus, now his shares will be 100. So previously, before bonus issue, number of shares in a company, suppose 1 lakh, 1:1 ratio company given bonus shares, that means another 1 lakh will be added. So total shares after bonus issue 2 lakhs. Sir, before bonus issue 1 lakh shares, sir, company given 1 lakh shares, so after bonus issue it will be 2 lakhs. So your percentage, if I compare na, sir, your percentage before bonus issue, for example, the shares in the company is 1 lakh, sir. In that, suppose for example, I am having 10,000 shares. So what is my percentage of holding? 10,000 divided by 1 lakh. How much? 10%. Now 10,000 shares I am having, company has given 10,000 shares bonus, it will be 20,000. Now I need to compare on this 2 lakhs 20,000. How much? Same 10%. Are you understanding what I am speaking? What I am speaking is, because of bonus issue, overall shares will also increase. So before bonus issue, what is your percentage of control? After bonus issue, your percentage of control will remains unchanged. That means your ownership will not get diluted. In the company, before bonus issue, what is your control? After bonus issue, also same control. For example, you are having 10,000 shares in 1 lakh. Now in 20,000 shares in 2 lakhs. Same percentage, na? So therefore, because of bonus issue, for a shareholder also, there is no increase in the percentage of control. His value of capital, value of investments will also remains unchanged. Please understand. This is from shareholder point of view, but you need to think from the company point of view. You need to think from the company point of view. You understand what is bonus issue basically? So company will convert its existing reserves into share capital. Now the question arises, sir, why companies will do this? What is the use if company converts their profits into share capital? What is the advantage to the company? Is there any advantage? Definitely it has its own advantages. So that is our next topic, sir. Effect of bonus issue. Now tell me, effect of bonus issue. When a company increases, or when a company offered bonus shares or bonus issue, what is the effect? Tell me. Think and tell me. First effect. Definitely first what happens? Increase in share capital will happens. Definitely share capital will increase. Correct pa? Share capital will increase. Share capital. Because of the increase in share capital, what is the advantage? For example, previously the company shares are 1 lakh. Now another 1 lakh is given bonus shares. So number of shares of the company is 2 lakhs now. What is the advantage? Liquidity of the stock will increase. When the number of shares increases, stock shortage is not there. Stocks are freely available. Therefore buying and selling will happen. Therefore liquidity will increase. Liquidity means buying and selling. See, some stocks are very scarce in the market. Very limited shares are there. If the limited shares are there, then usually buying and selling less frequently will happen. But if you, because of the bonus issue, your number of shares is increasing, company shares are increasing, because of that the liquidity of the stock will increase. So that is increase in share capital is the first effect. Thereby liquidity also will increase. Liquidity of stock will increase. Liquidity of stock will increase. So if anybody asks you what is the advantage of bonus issue, you have to tell them, because of bonus issue there is an increase in share capital. Number of shares will increase. Because of the number of shares increase, the trading, the buying and selling transactions will also increase. That means the liquidity of the stock will also improve. Hello. And one more important advantage is, because of the bonus issue, one more important advantage is reduction in EPS. Reduction in EPS, earning per share. Reduction in EPS. Earning per share will decrease, sir. Sir, if earning per share will decrease, na sir, obviously market price will also come down. If the market price come down, na sir, definitely every investor, retail investors can purchase shares of the company. Hello? Reduction in EPS. Reduction in EPS. For example, you see 24, 25. Last year company profits 10 lakhs. This year also suppose 10 lakhs. When the profits are same, see this. Number of equity shares of the company 1 lakh, for example. Okay. Now can you tell me EPS? EPS means profit divided by number of shares. Your profit is how much? 10 lakhs. Number of shares 1 lakh. So 10 lakhs divided by 1 lakh, 10. Your EPS is 10. This year you come, suppose for example current year company made a bonus issue. Bonus issue 1:1 ratio. That means for 1 lakh shares, another 1 lakh shares is given bonus. So the number of shares will be 2 lakhs. Profits remain same because of the bonus issue, number of shares increased. Last year it is 1 lakh shares, sir. Now we have given another 1 lakh shares, 1:1 ratio. Now you tell me 10 lakhs divided by 2 lakhs. What is EPS? 5 rupees. See this. EPS decrease. Last year EPS 10. This year EPS 5. If EPS decreases, na, generally market value will have a correction. There is a reduction in the market value. If the reduction in the market value happens, what happens? Tell me. Small investors can also purchase the shares of the company. Retail participation will increase, sir. Retail participation will increase. So therefore, another advantage of bonus issue is reduction in EPS, reduction in earning per share. Because of the reduction in EPS, obviously there is a chance that the market price come down, so that the more number of people can purchase the shares of this company if the market price come down. Sir, which company thinks they want to reduce their market price? See, actually these are all theoretical things, which might happen, might not happen, depending upon the market conditions also. But generally company can use bonus issue as a strategy to reduce the EPS. Sometimes the share prices goes beyond one level. Now it is not available to the small retail investors. So it is the responsibility of the company to make sure that the share is properly trading in the market. For that they want to reduce. See, it is not always about increasing the market price. Sometimes it is about decreasing also. So maybe bonus issue will reduce the EPS, thereby the market price. This is another effect of bonus issue. And one more effect of bonus issue is it's a favorable act. Favorable act considered by market. Considered by market. Favorable act considered by market. Sir, giving bonus issue is which act? Favorable or unfavorable? Hello? Giving bonus issue is a favorable thing or unfavorable thing? Which will increase the, the positive image of the organization will increase or decrease? Is it a positive image or negative image? Positive image. How it is a positive image? Because in bonus issue basically what we are doing? We are converting the profits into capital. So obviously people will think that only this company is having a solid reserves. Solid profits is there. That's why they are issuing bonus shares. Without having solid reserves and profits, how can you give bonus issue? Because bonus issue is nothing but converting your reserves into capital. So therefore it's a favorable act. People will see this as a positive thing from the outside. So if any company is going bonus issue, means that company is having a solid profits in the reserves and surplus. So it's a favorable act. Hello? This is one effect. And also what happens because of the bonus issue, this point I already told you, adjustment in market price. Adjustment in market price will also change because of the bonus issue. Your market price will adjust it. You can say decrease. Okay. How market price will decrease, sir? Because of the bonus issue. I told you, sir, two reasons. One, because of the bonus issue, suppose you are earning constantly same profits. So your EPS will come down if number of shares increases because of bonus issue. Just now I told you 10 rupees EPS has become 5. So if EPS come down, automatically market price come down. There is a direct relation between EPS and market price. If earning per share comes down, now market price will come down because it's a negative thing. Decrease in the EPS is a negative thing, which will impact the market price. The adjustment in market price. One more reason is that because of bonus issue, I told you, na, number of shares will increase, liquidity of the stock increases. See, tell me, when the supply is more than demand, obviously price will come down naturally. So therefore, because of bonus issue, what you are doing, you are increasing the supply. Obviously, demand will come down. Previously, suppose bonus shares, suppose without bonus, your shares are 1 lakh trading in the market. Now you have issued another 1 lakh shares. That means 2 lakh shares are trading. Suppose, for example, I am the shareholder of a company, sir. I am having 10,000 shares. Now company has given another 10,000. That means with me 20,000 shares are there. Obviously, what is my thinking? 10,000 shares I got freely. Therefore, I will sell it. I will sell it and I will encash it. So therefore, buying and selling transactions will increase. And obviously, if I am ready to sell the shares, obviously demand will decrease. See, people wants to buy your shares, then only the market price will increase. If everybody wants to sell the shares, it's a panic situation, fearful situation, right? Obviously, prices will come down. Everybody. So adjustment in market price. And another effect of the bonus issue is what? Reduction in accumulated profits. Reduction in accumulated profits. Okay? Reduction in accumulated profits. What is this reduction in accumulated profits? Nothing but reserves and surplus. Accumulated profits means reserves and surplus. See, why I spend this 5 to 10 minutes is because this is very important. Most of the students are understanding what is bonus issue, but without understanding what is the effect of this, why we are going for bonus issue. So that's why I have taken time, maybe 5 to 10 minutes taken, no problem for us. So because we will understand this, so forever you will remember. So you understand what is the effect of bonus issue. So tell me, if I am a company, you are my existing shareholders, I am giving you some shares freely, that is called bonus issue. And because of this, what is the advantage to the company? What is the effect of bonus issue? First, increase in share capital, that thereby liquidity will increase. Second thing, EPS will come down. Generally, if profits are constantly same, if you increase the number of shares, obviously EPS will come down. If EPS come down, it will correct the market price. Maybe market price will come down, so more retail participation can be done. Hello. Next, it's a favorable act. Giving bonus shares will increase the positive look of the organization. Positive image will increase of the organization. People will get to know that this company is having a solid build-up reserves in the company. How can a company will have a solid reserves? Only when they earn, only when their history is good. Your reserves and surplus will be solid. It's a favorable act. Next, adjustments in market price definitely will happen because of bonus issue. And last one, your reserves and surplus will be reduced because we are converting the we're converting the profits into share capital. Obviously, your reserves and surplus will come down. Okay. So therefore, what is bonus issue? The effect of bonus issue we have completed, sir. Now next most important thing is types of bonus issue. From here onwards, the most crucial part I am going, sir. Listen to me carefully. Types of bonus issue. Types of bonus issue, sir. Sir, there are two categories of bonus issue, sir. There are two categories of bonus issue. Listen to me. Hello. There are two types of bonus issue, because this is very important. Depending upon the type of bonus issue, the accounting treatment will be given. Okay. There are two types of bonus issue, sir. One is bonus. One type of bonus is fully paid bonus shares. One type of bonus is what, sir? Fully paid bonus shares. Another type of bonus shares is bonus by way of converting partly paid up shares into fully paid up. Bonus by way of converting partly paid up shares. Bonus by way of converting partly paid up shares into fully paid up. Okay. bonus by way of converting partly paid into fully paid. So tell me types of bonus. What is the first type, sir? Fully paid bonus shares. Read carefully. Second one, sir, bonus by way of converting partly paid up shares into fully paid up. Sir, what is this? Listen. For example, fully paid up bonus shares means you are a shareholder. Suppose Mr. X is the shareholder of a company. Okay, he is the shareholder. Now he is having some shares in this company. Suppose the face value of the share is 10 rupees. Face value of the share is 10. He paid 10. That means this is which share this is? Fully paid shares. So this is called fully paid share. Fully paid share. Correct? Face value 10, paid also 10, sir. Called paid 10. So it is fully paid shares. Now generally what company will do is, whenever they want to give bonus shares to the existing shareholders, they will make sure that the first shares will be fully paid. For example, face value 10, sir. Face value 10. Till now paid only 8. That means what is the unpaid amount? 2. Now this share is unpaid, right? Not fully paid. 2 rupees unpaid is there. First they will call this 2 rupees. They will make fully paid and then they will give fully paid bonus shares. That means in order to give fully paid bonus shares, the original share must be first fully paid. So that means if I am already a shareholder in a company, I paid full amount on the share. My shares are fully paid. Now company can give me some bonus shares on this. Those are called fully paid bonus shares. One complete share will be given as bonus. That means I am not required to pay anything. For example, I am having 10 shares. Now company has given another 10 shares to me, fully paid up shares. That means company will assume that you paid the full amount. Even though you have not paid anything, we allotted these 10 shares in your name and we assume you fully paid. Those are called fully paid bonus shares. That means, for example, tell me they have given 10 shares freely, right? Each share face value is 10 rupees. So therefore, what is the total bonus value? 100. 100 rupees is the bonus value. This is called, bonus value, bonus shares. This is called bonus share capital. Bonus share capital. Number of bonus shares into face value. Number of bonus shares into face value. And as per the Companies Act, sir, one provision is there. Partly paid up shares cannot be given fully paid bonus shares. In order to give fully paid bonus share, first of all, the original share, whatever the balance amount is there, that has to be called. Make it fully paid up. Then you can give fully paid bonus shares on that. That is first type of bonus share. Fully paid bonus share. One full share will be given as bonus share. Full shares will be given as bonus shares. Even though you have not paid, we assume you have paid it. Sir, what is the second category? See this. Second category, bonus by way of converting partly paid into fully paid shares. Now, interesting. Listen. Sir, in this, suppose for example, there is a shareholder. Face value of the share 10 rupees, sir. Paid 8 rupees, sir. How much is the unpaid amount, sir? 2. Now, in the second category, sir, this unpaid amount is there, sir, 2 rupees. This will be given in the form of bonus. That means they will make your partly paid share into fully paid. You understand the difference? Please observe. Bonus by way of converting partly paid into fully paid means whatever the unpaid amount is there, that unpaid amount company will assume that you have paid it. That means the unpaid amount is the bonus element company is giving. That is second category of bonus. That is bonus by way of converting partly paid into fully paid. Here the bonus is only this much, 2 rupees. But here the bonus is entire amount, 10 rupees. So what is the difference between fully paid bonus shares and bonus by way of converting partly paid into fully paid? In fully paid up bonus share, one full share face value, if I assume, or if I take one share, that will be given as bonus to you. We assume that you have paid it. But in second category, only the unpaid amount on share is there na, that we assume that you have paid it. That means company, that unpaid amount is there na, that will be converted from shares to, that will be converted from profits to share capital. That means 2 rupees will be taken from reserves and surplus and credited to share capital. But here, suppose if the face value is 10, entire 10 rupees will be credited to share capital from reserves and surplus. Tell me. No. See, first thing is that the condition in the Companies Act is for issue of fully paid bonus shares. If you want to give fully paid bonus share, first of all the share must be fully paid. Suppose if the share is partly paid, you want to give bonus on that, you want to give fully paid bonus share, you want to give bonus, fully paid bonus shares, that is not allowed. That is not allowed. For example, my share is 10 rupees sir, face value, I paid 8, so 2 rupees unpaid na. On this, can a company give fully paid, one fully paid bonus share as a bonus? No, not allowed. For that, they need to first call the remaining 2 rupees, make it fully paid, then they can issue fully paid bonus shares. But to convert the partly paid into fully paid, so second category, okay, this one, this is allowed. This 2 rupees, unpaid portion bonus can be given separately. This is different, this is different. If you want to give fully paid bonus shares, means first of all it has to be fully paid. The share must be fully paid. This 2 rupees company will call is first category, second category. Yes, shareholder will pay. Shareholder will pay 2 rupees. Suppose for example in the first category, 2 rupees unpaid na, first company will call, shareholder will pay. Now let his make his share fully paid. Then company will give fully paid bonus shares. In second category, company will call the 2 rupees. That will be adjusted against bonus. That's it. The shareholder will not pay. In the second category, 2 rupees will not paid by the shareholders. Company will give it as a bonus. In the first category, first suppose partly paid up shares is there. First they will make it fully paid. Then they will give fully paid bonus shares on it. You understand? So tell me, what are the types of bonus issue? Fully paid bonus shares. Bonus by way of converting partly paid up shares into fully paid. Fully paid bonus shares, if company wants to give, first of all the share must also be fully paid. Fully paid. One full share they will give as a bonus. But in case of converting partly into fully paid up, only the unpaid amount, shareholder is not required to pay. Company will give it as a form of bonus. Hello? Which one? This one, resource reduces, so it will convert into share capital only, na? Share cap, one place you are removing, one place you are adding. There is no effect. Reserves and surplus, share capital are part of overall shareholders funds only. Share capital and reserves and surplus, both are becoming part of shareholders funds only. But his profits only in the company has been reduced, na? Ultimately, who enjoys the profits of the company? Shareholders, equity shareholders. For example, in our left pocket 100 rupees is there. I removed this 100 rupees from the left pocket, I put it in right pocket. Tell me, advantage or disadvantage? No advantage. So the point you need to understand is, suppose I am the shareholder in a company. What company is doing? My profits only they are converting into share capital. My means I am shareholder, equity shareholder means I am also eligible to participate in the Sir, the profits of the business belongs to whom, sir? Owners. Who are the owners in the company? Shareholders. Only their profits only converting into share capital, na? Okay. But understand, sir, here of course shareholders will have an advantage. What is the advantage? Their number of shares will increase. They can sell their shares, all these things. Positive image increase means market price of the share will increase, like that. These things will happen. But overall, because of the bonus issue, you can't expect extraordinary benefits as of now. Your value of the shares, your investment value will be remain same only. Just that your number of shares will increase, but overall percentage in the company remains unchanged. Now, how can it will increase? Dividend. Overall share capital will also increase, na? For example, your capital increases Obviously company will pay, yeah, dividend may increase provided company decided to pay dividend on bonus issue also. But most of the times what companies will do, they won't give dividend on bonus shares. Okay, so you understand types. So what is the difference in fully paid bonus shares and second one? In fully paid, one full share will be given as a bonus. For example, if 10 rupees is the face value, total 10 rupees company will give bonus. Okay, but in the second case, only unpaid amount will be given in the form of bonus. Understanding? Okay. So these are the things. Now next, sources of bonus issues are very, 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 very important. Okay, listen to me carefully, because in order to do the accounting, the sources are very, very important, sir. Sources are very, very important. I told you there are two types of bonus, right? Now you see, first, fully paid bonus shares. Fully paid bonus shares. Suppose company wants to give fully paid bonus shares to the existing shareholders. Sir, what sources they can use? What sources they can use? Three sources, sir. Three sources can be used. How many? Three. First one, sir, free reserves. Company can use free reserves. Second, securities premium. Company can use securities premium. Securities premium can company use? Hello? Securities premium can company use for fully paid bonus shares? Go and check in first chapter. We have seen securities premium. Securities premium can be used for following purposes. In that, one of the purposes fully paid bonus shares is there. If you want, you can check also. So securities premium can be used for fully paid bonus shares. But here important point is, they say securities premium realized in cash only will be utilized. For example, securities premium not realized in cash, that cannot be utilized for fully paid bonus shares. So remember, while solving the questions, securities premium given in the question, and if they said the securities premium is created because of issue of shares for consideration other than cash. This, even for example, you purchased an asset, you issued shares to the vendor, that too at premium. So securities premium will be created in the books, but that security premium is not collected in cash. When securities premium is not collected in cash, na sir, you should not utilize it for fully paid bonus shares. So only securities premium realized in cash will be utilized for fully paid bonus shares. So you remember this point, important. And the third source we can use for fully paid bonus shares is capital redemption reserve. Capital redemption reserve. Capital redemption reserve. There is one reserve called CRR, capital redemption reserve. This CRR will be utilized only for fully paid bonus shares. Sir, remember, sir, CRR will be utilized only for fully paid bonus shares. It does not have any other purpose except for utilizing this fully paid bonus shares. Except for utilizing fully paid bonus shares. See, this creation of CRR will arise in case of two situations. One is redemption of preference shares in case of buyback. Whenever company is going for redemption of preference shares and buyback of securities, then they will create CRR. Actually, in our syllabus, we have both. We have buyback topic, we have redemption of preference shares topic also. Okay, when I'm discussing redemption of preference share capital and buyback, I will explain the concept of CRR also. Why companies will create CRR. But remember, if any company creates CRR in its books, if CRR is there, that CRR will be utilized only for fully paid bonus shares. Only first category, understand, fully paid bonus shares only you have to utilize. So tell me, what are the sources? Three sources. What are those? Free reserves, securities premium, CRR will be utilized. And here one important point, sir, they categorically saying that any reserve created by revaluation of assets like revaluation profit, revaluation reserve cannot be utilized for fully paid bonus shares. It cannot be utilized for bonus issue. It's bonus issue at all. We have discussed in accounting standard 10 in first group. Or else, if any asset is revalued, na revaluation reserve will create na revaluation profit. That revaluation profit cannot be utilized for bonus issue. So please understand, revaluation profit, revaluation profit cannot be utilized. Cannot be utilized for bonus issue. Revaluation profit cannot be utilized for bonus issue. Free reserves, securities premium, capital redemption reserve. These are the sources generally we will use for fully paid bonus shares. Okay, sir, what about the second category? Bonus by way of converting partly paid into fully paid. Partly paid into fully paid. Second category. Suppose company wants to give bonus by way of converting partly paid into fully paid shares. Then the act says, sir, only one source you have to utilize. You can utilize. What are those? Free reserves. That's it. Only one source you can use, sir. What is that? Free reserves. So that's why it is important to understand the types of bonus issue. Depending upon the type, the source will be utilized for bonus issue. If it is fully paid bonus shares, three sources can be utilized. Any combination of these three can be utilized. Free reserves, securities premium, CRR. But if you are converting bonus by way of converting partly paid into fully paid shares, then only one source, that is free reserve, had to be utilized. Securities premium you cannot utilize. CRR you cannot utilize for this category. Understand? Securities premium, CRR cannot be utilized for converting bonus by way of converting partly paid up shares into fully paid up shares. You remember this? Now what is free reserves? Because here they are saying that free reserves can be utilized for fully paid up bonus shares also, and converting partly paid into fully paid also, free reserves can be utilized. Sir, what is this free reserves? See, simple. Free reserves means the reserves which is available for distribution of dividend. What is free reserves, sir? Reserves available for distribution of dividend. Distribution of dividend. Distribution of dividend. Sir, in case of company, sir, company will give dividend to its owners, shareholders, right? Now to give dividend, company has to, some profit should be there in the business. Which profits we can use for payment of dividend, distribution of dividend to shareholders? Those are called free reserves. So free reserves literally meaning the reserves which can be used for any purpose. When we call them as free reserves means if this reserve I can use it for payment of dividend, distribution of dividend, then it is obviously free reserve. But there are some reserves which are restricted. I mean they cannot be utilized for distribution of dividend. No, they are not called as free reserves. So free reserves means the reserves which is available for distribution of dividend, also called as divisible profits, distributable profits. Whether you call it as divisible profits, distributable profits, free reserves, meaning same. Whenever a company wants to go for bonus issue, they can use these free reserves. Hello. Best example could be P&L account balance. Any balance in the P&L account is a free reserve which can be used for any purpose. And also any balance in general reserve. General reserve. Suppose in the balance sheet of a company you have seen one reserve called general reserve. The name itself is saying it's a general reserve which can be used for any purpose. Or suppose sometimes you will see a reserve called revenue reserve. Revenue reserve which can be a free reserve which can be used for any purpose. Or dividend equalization reserve, like that. Dividend equalization reserve, one reserve is there. Like for example any reserve which is created for emergency meeting of funds, that is also a free reserve. And any contingency reserves, emergency reserves, any insurance reserves, insurance fund reserves, like that. Those are all free reserves only. But mostly these three, P&L account, general reserve, revenue reserve, these are free reserves which can be used for payment of dividend. There are some reserves which are not free reserves. Like for example securities premium is not a free reserve. Debenture redemption reserve, suppose for example see, securities premium is not a free reserve, na? Why? Because securities premium will be utilized only for 5 purposes. It cannot be used for payment of dividend. Therefore, it is not a free reserve. For example, another reserve called what is that? Debenture redemption reserve. In redemption of debentures chapter, we learn this debenture redemption reserve. Generally, debenture redemption reserve is utilized for distribution, payment to debenture holders. It is not a free reserve. Hello, and like for example, we have so many reserves. Development rebate reserve, I mean any reserve which is created as per the act. For example, what is that? exchange fluctuation reserve. All different kinds of reserves will be there, sir. Different purposes company will create the reserves. Now out of those reserves, which reserves I can use for payment of dividend? They are all free reserves. Of course, there is a definition in the Companies Act relating to free reserves, which we will see it. But my thing is, you have to understand, I told you the sources of bonus issue. Suppose if a company is issuing fully paid bonus shares, tell me what are the three reserves you can use? Free reserves, securities premium, CRR, these three. Any reserve created by revaluation of assets like revaluation profit, can you utilize? No. And if you are giving bonus by way of converting partly paid into fully paid, which reserves you can use? Only free reserves. Only free reserves. Only free reserves. This the free reserves, both the places same only. See, but everybody please say this once. Come to our material once, everybody. See the meaning of free reserves. This is very important, sir, because so many other places also this free reserves will come to you. You learn it once for all. What is free reserves? Look at the definition. Free reserves refers to reserves according to the latest audited balance sheet are available for what? Distribution as dividend. See this. Any profits which is available for distribution of dividend is called free reserves. But some exclusions are there. Exclusions from free reserves. Certain reserves will not consider as a part of free reserves. Sir, what are those, sir? First, unrealized notional gains. See this. Any unrealized gains or any notional gains. Notional means imaginary. We have not actually realized it. Those are. So unrealized gains which is not realized. Notional means we are assuming those gains. So that means gains which are not realized, gains which are not actually exist, not received in the form of cash, they are not considered as free reserves. For example, exchange fluctuation reserve, exchange gains. For example, exchange gains will arise because of the foreign currency rates fluctuations. That is not actually realized. So therefore, they are not considered as what? Free reserves. Hello. Any unrealized gains or any notional gains or any or revaluation of assets. This is the point I told you, very important. Revaluation of assets. Any revaluation of assets you do, no sir, you will get what? Revaluation reserves, revaluation profits. Those revaluation profits are also not free reserves, excluded from free reserves. Shown as reserves are not considered as a part of free reserves. So they should not be considered as free reserves, sir. That's why, sir, for example, capital reserve, I said capital reserve. If that capital reserve is not realized, sir, that is not free reserve, because unrealized gains are excluded from free reserves. That's why in the study material of ICMA they have given capital reserve realized in cash. Realized in cash is free reserve which can be used for distribution of dividend. Which can be used for distribution of dividend in the sense which can be used for fully paid bonus shares. That point also I will tell you, wait. And also, sir, any change in asset or liability value. Suppose company has made any change in the asset value, liability value. Because of that, any revaluation gain, any gains arises, they are also not free reserves. Okay. Any change in the carrying amount of asset and liability recognized in equity, including any surplus of profit and loss from measuring assets and liabilities at fair value. Sometimes assets and liabilities will be measured at their fair value. Fair value means market value. In that process, the asset value will be increased or decreased. If the asset value increase, generally we call it as a gain. If liability value decrease, that is called a gain. That gains, because of the change in the value of the assets and liabilities, are not considered as reserves. Those should not be considered as free reserves. That's why they are excluded from free reserves. So basically, what is free reserves, sir? Understand, sir, two things are specifically excluded. Any unrealized gains, notional gains, any revaluation of assets, they are not free reserves. Okay. Now I told you sources of bonus issue, right? What are the sources of bonus issue? Can you tell me? That depends on the type of bonus issue. I told you, suppose if a company is issuing fully paid bonus shares, look at the wordings. A company may issue which bonus? Fully paid bonus. Then they have the following sources. What are those? Free reserves, securities premium, capital redemption reserve. And note point, you see, no bonus shares can be issued from reserves created by revaluation of assets. We cannot utilize it. Okay. And suppose you see here, conversion of partly paid into fully paid. That means second type of bonus. For this, what company can use? See this sources. The source for bonus dividend must be only free reserves. Free reserves only. Okay. And also see here, securities premium can be used for issuing fully paid bonus shares, but not for bonus dividend. Bonus dividend means second category. That is converting partly paid shares into fully paid. Sir, because second category I told you only one source will be utilized. What is that? Free reserve. Next, capital redemption reserve prohibits the use of CRR for purpose other than issuing fully paid bonus shares. This point also I told you. CRR will be utilized only for fully paid bonus shares. And then this point you put a star mark, sir. Capital reserve. Put a star mark. This is the extra point which is there in the CMA study material. Capital reserve realized in cash. See this, realized in cash can be used for both. That means first type of bonus, second type of bonus. That is fully paid bonus shares as well as bonus by way of converting partly paid into fully paid. For both purposes, you can use capital reserve. Hello? The second type of bonus, sir, that is converting partly paid into fully paid is called bonus dividend, sir. If you see any with the word bonus dividend, that is second category of bonus, sir. That is what they have given here. See, this a company may use its reserves to convert partly paid into fully paid without requiring further contributions from shareholders. This is termed as bonus dividend. So second category of bonus is called bonus dividend, sir. This is bonus dividend. So in order to give second category of bonus, only one source will be utilized. What is that? Free reserves. When it comes to capital reserve, only capital reserve realized in cash will be utilized. For example, any asset sold, we got a profit. Generally, that's a capital profit. Any profit earned on sale of asset. So here, when I sell the asset, I got profit. That means it's a capital profit realized in cash. Therefore, I can use that amount for bonus, either fully paid or bonus dividend, partly converting partly paid into fully paid. Apart from that, I can't use any other free except free reserves. I can't use any other reserve for bonus issue. Second category. Are you understanding? Because this is important. Now see the conditions, sir. If you see in my discussion, we have discussed till here. Now conditions for bonus issue we'll see. Conditions for bonus issue. So in bonus issue chapter, so far what we have covered, tell me. We have covered what is bonus issue, then what is the effect of bonus issue, then types of bonus issue, and then sources. Sources you understood? If it is fully paid bonus shares, three sources: free reserves, securities premium, CRR. Free reserves means which is available for distribution of dividend. Which are excluded from free reserves? Any unrealized gains, notional gains, revaluation of assets, and also any change in the assets and liabilities values by recognizing them at their fair values. They are not considered as free reserves. Basically, P&L account balance, general reserve, revenue reserve, dividend equalization reserve, these are all free reserves. Securities premium, debenture redemption reserve, capital reserve, these are not free reserves, which cannot be used for bonus issue. But I told you in CMA study material, one important point is there. What is it? Capital reserve, which is realized in cash, they are using for bonus issue. I don't know to what extent that is right, but they are using. Okay. And even one point also I told you, securities premium which is realized in cash only will be utilized for bonus issue. That point also I told you way back in my discussion. Yeah, obviously. Next, conditions for bonus issue. You see, these conditions for bonus issue, how many of you think they are going to ask this in examination? They have asked this. Conditions for bonus issue. We see the question bank, I will show you. In the bonus issue chapter, questions you see, June 2023 question. What is the question to see this? See this. What are the, write a short note on conditions for issuing fully paid bonus shares. Conditions for fully paid bonus shares they have asked. See this 4 marks. So don't be under the impression that they are not going to ask. I vexed sir so many times. I'm telling the students that don't make your personal things, personal assumptions. Examination is different than what you are thinking. Yesterday also I told to one student, he is preparing a waste things, not concentrating on the important things. First I told him that you see the past, no, not you, one person online student. I told him that you see the past examination questions first. Once you see last 3 years past examination questions, you will get an idea what type of questions they are asking, what is the maximum marks. Accordingly, you need to prepare, or else just you need to follow what faculty says in the classroom. No, sir, I will prepare whatever is there in the study material, whatever is there. See, in the study material, most of the topics they just dumped. Copy, paste. Lot of unnecessary stuff is there. So if you keep on preparing on yourself, yourself is good only. But the thing is that make a proper analysis first. See the examination questions, what the examiner expecting, what type of questions they are asking. A corporate accounting means they don't be under the impression that they will always ask only accounting, calculation questions. This is corporate accounting. That means it is linked with Companies Act, right? So they will test the provisions also. Okay. Now these conditions for bonus issue very important, sir. They have asked once in examination. Again they may ask. Some students now the trend is, sir, this question already, this topic already asked in the last attempt. So next attempt they won't ask. So I will skip this. Hey, what is this madness here? Is there any hardened thumb rule that last attempt they have asked, this attempt they won't ask? So don't fall that kind of trap, sir. It may work 1 or 2 times. Last time AS 22 asked, sir. This time AS 22 they won't ask. Who said they won't ask? They may ask, na. There is no such thing. The person who is setting the paper, he won't see last attempt what asked, before attempt what asked, now what I need to test. Now based on those parameters, I don't think so he will follow. In the syllabus, whatever he want to test, he will test. Definitely. Those things are gone here. Just you are predicting the paper. Those things are gone. Nowadays the paper can be like anything. Only after writing the examination you will see, this time asked like this. So you can't predict the paper. Please understand. Otherwise, if that is the case, I would have been earned crores of rupees. Not by teaching, just guessing, guesswork. Like what you say, Jyotisham. They will see your palm and tell you your future, right? Predictions. Like that, if I can also predict, if my predictions correct, everybody will come to me directly only. What is there to study? Just I will give the question paper to them. 1 lakh rupee I will charge. What is there? But it is not possible. It is not like that. Okay. Now see the conditions for, bonus issues here. And sir, these conditions are only for fully paid bonus shares. Please understand. These are conditions for, you add here fully paid bonus shares. Fully paid bonus issue or bonus shares. These are the conditions. And these conditions are from Companies Act. These are from Companies Act, sir. I think in Companies Act we have exclusive separate sections, sir. One section is there. I think section 63, which exclusively talks about bonus issue. Okay, section 63. What are the conditions? The act says whenever a company wants to issue fully paid bonus shares, there are certain conditions to be followed. The first condition is it should be authorized by articles of association. Bonus issue should be authorized by articles of association. If articles are not authorizing, then you are not eligible to go for bonus issue, fully paid bonus shares. Second thing is, once company decided to, If company wants to give fully paid bonus shares, na sir, they will conduct a meeting. It should be authorized in general meeting. It is authorized by the general meeting based on board of directors recommendation. Sir, in companies, you know, who are the owners of the company? Yeah, suppose for example, there is a company, sir. In this, generally, in case of a company, sir, there are two things: management, ownership. Management is in the hands of board of directors. Ownership is in the hands of members, shareholders. Now, once board of directors take any decision, sir, definitely a meeting will be conducted for members. In that meeting, voting will be done. If majority of the members accepted, simple resolution, special resolution, ordinary resolution, like that, then only the, decision will be carried forward. The decision will be approved. So here bonus issue also same, sir. First board of directors decided, okay, then it should be authorized in the general meeting. General meeting means shareholders meeting. General meeting means shareholders meeting. So shareholders meeting will be done. In that meeting, board of directors already recommended bonus issue. Shareholders will approve it. Then the decision should be taken. I mean, they can issue fully paid bonus shares. This is one condition. Next, third condition, fourth condition are very, very important conditions, and fifth also. These conditions are very, very important. Third condition is, whenever a company wants to go for fully paid bonus shares, sir, they should not have any default in payment of interest or principal for fixed deposits or debt securities. Important, sir. Suppose my company wants to go for bonus shares, fully paid bonus shares. Already my company issued debentures, debt securities. Already my company issued fixed deposits. Now, in respect of those in respect of those debts, there should not be any default in payment of interest or principal. Interest not paid, principal not yet paid, due date already came, then you are not eligible for go for fully paid bonus shares. Because the intention of the Companies Act is very simple. Dear company, when you already issued any, when you taken any debts, first you need to make the payment of those debts. Interest, principal portion, if there is any default, then you are not eligible for bonus issue. There should not be any default in payment of interest or principal. Sir, here the meaning is already due date came. You are not paying interest. Already due date, maturity date came. You are not paying principal. That means you are not eligible for go for bonus issue. And also, sir, company has not defaulted in payment of statutory dues to employees. Any statutory dues to employees like PF, gratuity, pension, you are not paid any statutory dues payable to the employees, then also you are not eligible for bonus issue. Provident fund, gratuity, bonus, because the intention of the Companies Act says, dear company, you want to give freely shares to the existing shareholders, first you make the payment to employees. Statutory dues payable to the employees, you need to pay gratuity, but you have not paid, so therefore you are not eligible. Okay, next, this is very, very important. See, any partly paid up shares are made fully paid up before allotment of bonus shares. That means you want to give fully paid bonus shares. That's why any partly paid up shares must made fully paid up. On that you give fully paid bonus shares. Sir, these conditions are for which bonus shares, sir? Fully paid bonus shares. If you want to give any fully paid bonus shares on partly paid up shares, it is not possible. First they must be converted into fully paid. And last point, the company complies with other prescribed conditions. Any other conditions prescribed, they need to follow, like SEBI guidelines and all. Next, note, bonus shares shall not be issued in lieu of dividend. So what is the meaning, sir? Bonus shares shall not be issued in lieu of dividend. That means it is not a substitute to dividend. Generally, previously, when I was taking coaching and all, faculties at that time, what they are used to tell me is that bonus is a substitute to dividend. When company does not have money to pay dividend, generally dividend will be paid in the form of cash. Suppose if company does not have cash, what company will do? They will issue bonus shares to satisfy the shareholders. But how a shareholder will satisfy? By receiving bonus shares? Because your profit only they are giving you in the form of shares. Correct? So therefore, the logic that bonus issue is a substitute to the dividend is not correct. That's why the act says it cannot be issued in lieu of dividend. That means dividend is separate, bonus is separate. Both cannot be say, sir, we have given bonus shares, that means dividend, this is itself is equal to dividend. No, it's not dividend. Bonus shares shall not be issued in lieu of dividend. For example, company declared a dividend, okay, and what board of directors thought is, we have declared a dividend, so dividend amount is, for example, 10 lakh rupees. Now we need to pay 10 lakh rupees cash. Instead we do one thing, if you pay 10 lakh dividend, our cash reserves will go out. Instead we will give bonus shares. That means our cash reserves will not go out now, because in bonus issue we are not giving any cash, just we are converting our profits into share capital. Some board of directors have done that previously. They are thinking that dividend and bonus issue both are same only. So in order to stop that, they said bonus shares shall not be issued in lieu of dividend. So you understand the intention of the act? The intention of the act is, some dividend involves cash outflow. Company has to make the payment of cash in the form of dividend if they declare. But in case of bonus share, they are not paying any cash na. So some companies are thinking that we are giving bonus means we are giving dividend only. No, that is not correct. So bonus share shall not be issued in lieu of dividend. So tell me, what are the 5 conditions, sir, in order to give fully paid bonus shares? Come on, tell me. First condition, authorization in article should be there. Second, it should be approved by the members in general meeting after recommendation by board of directors. What is the third condition? There should not be any default in payment of interest or principal of fixed deposits or debt securities. Debt securities means any loans or debentures issued by the company, debt taken, loans taken, and deposits taken. In respect of them, any interest or principal is pending, not paid, default is there, then you are not eligible for go for bonus issue. Next, no default in payment of statutory dues to the employees, like PF, gratuity, pension, all these things, employees amount. Next, if you want to give fully paid up bonus shares, first partly paid up shares must be converted into fully paid, and bonus cannot be issued in lieu of dividend. Next, come to SEBI guidelines, sir. SEBI guidelines. I told you, no, sir, we have Companies Act. Companies Act will prescribe the conditions. Now if you are a listed company, you need to follow the provisions which is there in the Companies Act as well as SEBI guidelines also. Now here you see the SEBI guidelines, mostly SEBI guidelines are also same as Companies Act guidelines. See this, first articles of association. SEBI also says the articles of association must allow capitalization of reserves, that means must allow bonus issue. If not, a resolution must be passed in the general meeting to amend the articles. So same Companies Act also said, whenever a company wants to go for bonus issue, articles of association authorization should be there. Even SEBI also saying same thing, there should be authorization in articles of association. Second condition is also same, no default in payments. So there should not be any default in payment of interest or principal for fixed deposits or debentures. Same Companies Act also said the same thing, no default in payment of interest or principal of fixed deposits or debt securities. SEBI is also saying the same thing. And also no default in statutory dues. This is also same point. The company must not have any default in payment of statutory dues such as provident fund, gratuity to employees. Next, partly paid up shares. This is also same. If a company wants to give fully paid bonus shares, they must convert the partly paid into fully paid. SEBI is also saying same thing. See, any partly paid up shares outstanding at the time of allotment must be made fully paid. Now, so that means first 4 conditions are exactly same as Companies Act. So you need not require to remember separately. So these are same as Companies Act, same as Companies Act 2013. But the extra important condition is this one. So remember, I am putting a star mark because in examination they once they have asked this. Okay, not in the form of question, maybe MCQ. What is this? FCDs, PCDs. FCD means fully convertible debentures. PCD means partly convertible debentures. So please write down here, fully convertible debentures, partly convertible debentures. Fully convertible debentures, partly convertible debentures, sir. Partly convertible debentures. Sir, if your company has issued fully convertible debentures, partly convertible debentures. First of all, what is fully convertible debenture? See, when a company issuing debentures, sir, if the option is given to the debenture holders that if you want, you can convert the full amount into shares, that is called fully convertible debentures. Suppose if the company has given an option that only part of the amount will be converted into equity shares, that is called partly convertible debentures. See, like shares, company can issue debentures also. Company can issue debentures also. At the time of issue of debentures, company may provide an option to the debenture holder that if you want, you can convert this debenture amount into shares in future. Those are called convertible debentures. Convertible debentures. If the conversion option is given 100%, that is called fully convertible. If the conversion option is given below 100%, that is called partly convertible debentures. Now the question is, interesting points, listen to me. Suppose a company is there, sir. That company issued convertible debentures, either fully or partly. Now the company is issuing bonus shares. Now bonus shares generally will be given to whom? Existing equity shareholders. Whether the benefit of the bonus shares is equally applicable to fully convertible, partly convertible debenture holders also, because they are not equity shareholders, they are debenture holders, but their debentures are convertible in nature. That means in future they will get converted into equity shares if they exercise the option. Now whether the benefit of the bonus issue is equally applicable to them also, and you understand my question? For example, I will tell you, I am the company, for example, Purna is there. Purna is the existing shareholder. Ayyappan is there. Ayyappan is an existing shareholder. Both of them existing shareholders. Now company is giving bonus shares. Company is giving bonus shares. Both of them eligible? Obviously, both of them eligible. Now Abdul is there. Abdul is not an equity shareholder, but he is a debenture holder. He purchased debentures of the company, and the debentures are convertible. Convertible means in future they can be converted into equity shares. Now when company is giving bonus to the existing shareholder, whether Abdul is also eligible, because Abdul is not a shareholder now, equity shareholder, he is a debenture holder. In future he may become equity shareholder. Hello. Now when in future when he become an equity shareholder, whether the bonus issue now offered to the existing shareholder, that bonus benefit is also given to him? The answer is yes. SEBI says yes. Whenever in your company fully convertible debenture holders, partly convertible debentures are there, and you are giving bonus issue, that benefit is equally applicable to convertible debenture holders also. That means in future when they get converted into equity shares, na sir, now in what ratio we are giving bonus, na, that bonus should be given to them also. Superb point this is actually. So see this, if FCDs, PCDs are pending conversion, bonus shares must also be extended to holders of such debentures. See this, that benefit should be extended to them also. Reserved shares for FCD, PCD holders may be settled at the time of conversion under the same terms of bonus issue. Now when these bonus shares will be given, not now, at the time of conversion, because now they are debenture holders. When they convert, they will become equity shareholders. Now whatever the benefit of bonus we are giving to the existing shareholders, in the same manner we need to give bonus shares to them also. Sir, you understand? So tell me, PCD holders, FCD holders, will they eligible for bonus issue? Yes. Company has to reserve the shares, bonus shares for them also, as per the SEBI guidelines. And this point, you see, important point, SEBI says, what SEBI says about free reserves? The bonus must be made from free reserves, built from what profits? Genuine profits or securities premium collected in cash. See this important. This is exclusively there in the study material, CMA study material. Therefore, two important points I will tell you. One is securities premium collected in cash will be utilized. Second thing, capital profit realized in cash will be utilized. That's what we learned. Capital profit realized in cash will be used for both the type of bonuses. And what about revaluation reserve? SEBI says it cannot be utilized for bonus issue. Same as Companies Act says. And same SEBI says bonus cannot be made in lieu of dividend. It is not a substitute to dividend. And timeline for implementation. This is the extra point which is there. Sir, we are learning what? SEBI guidelines. First 4 guidelines are exactly same. 5th different point. 6th different point. Okay, 7th same point. 8th same point. 9th point time limit. SEBI says whenever in how many days bonus shares must be implemented. If shareholders approval is required, na sir, 2 months we need to implement the entire bonus issue. If shareholders approval is not required, 15 days bonus issue must be implemented. So guidelines, sir, SEBI guideline says once the bonus is approved by the board of directors, so the bonus must be issued to the shareholders within 15 days. If the shareholders approval is not required, generally sometimes shareholders approval is not required for bonus issue. If shareholders approval is required for this bonus issue, then 2 months time we need to implement this. Last one, once bonus declared, it cannot be withdrawn. Suppose for example company declared bonus shares After 5 days, company said, no, sorry, mistake happened from our side. No bonus, no bonus, bonus. Can they withdraw? No. This is not a kids play. Once you announce the bonus issue, after that, sorry, we are withdrawing. Shouldn't happen like this. So these are the conditions of SEBI guidelines. You understand them? That's it. So therefore, we have discussed all the conditions for bonus issue also. So now the last one is accounting of bonus issue. Accounting for bonus issue. So in bonus issue chapter, conditions also discussed. Last one pending. What is that, sir? Accounting for bonus issue. Listen to me carefully. I will explain in a very simple manner accounting for bonus issue. So accounting for bonus issue, that means accounting entries. Accounting for bonus issue. Tell me, sir, how many types of bonus is there? 2. One is fully paid bonus shares. First I am going to explain accounting entries for fully paid bonus shares. For fully paid bonus shares. Fully paid bonus shares. Fully paid bonus shares. See, in respect of bonus shares, only 2 entries, fully paid bonus shares means 2 entries will come. Only remember 2. First, on declaration of bonus. On declaration of bonus. First, company will declare the bonus, right? Tell me, you are issuing fully paid bonus shares. So when the company declare bonus, what is the entry you will write? Tell me. For fully paid bonus shares, company will use reserves. Which sources company can use? 3 sources. What are those? Free reserves, securities premium, CRR. Whatever you utilize, you debit it. Credit is given to bonus to shareholders. 3. Any combination. Whatever manner you are utilizing, just debit them. For example, I used free reserves. Debit free reserves. How much utilize? 50,000. 50,000 debit free reserves. CRR 50,000. No order, no particular order. Any combination is okay. So if free reserves available, securities premium available, CRR available, any order you can utilize. Nothing wrong in that, because Companies Act does not saying any preference and all. But the suggestion is, if CRR is there, use first CRR, because CRR is exclusively made for that only. So CRR and bonus, fully paid bonus shares, they are made for each other. Their marriage is already fixed. So therefore CRR is waiting from the ages only for one purpose. What is that? Fully paid bonus shares. So therefore it does not have any other purpose. Correct? That's why. So therefore whenever any declaration of bonus happens, sir, so CRR account will be debited if you use it. Securities premium account will be debited if you use it. And free reserves account will be debit if you use it. Free reserves means P&L account to general reserve, revenue reserve, dividend equalization reserve, any other reserve which is freely available for distribution of dividend, given depending upon the information given in the question. For example, any revaluation reserve is given, it is not a free reserve, don't utilize it. For example, capital profit given, if it is not realized in cash, don't utilize it. I told you, if securities capital profit realized in cash, you can use it. Similarly, securities premium collected in cash, you utilize it. 2. Bonus to shareholders. When you declare reserves and surplus to bonus to shareholders, you write. Correct? Next, issue of bonus shares. On issue of bonus shares, fully paid bonus shares, nothing but fully paid bonus shares. When you issue fully paid bonus shares, what is the entry? Bonus to shareholders to equity share capital. Equity share capital. Okay? Equity share capital. Equity share capital. And if you remember, sir, this is what I told you in the beginning. What is the net effect of bonus issue? Tell me. Net effect is your reserves are converting into capital. That is what exactly happening now. See, if you see this bonus to shareholders, you cancel it. Automatically it got cancelled. Therefore, if the net, what is the net entry here? Reserves and surplus account debited to equity share capital. That's why this is called capitalization of profits. Your reserves are converting into capital. Your reserves are converting into capital. So on declaration of bonus, reserves to bonus. On issue of bonus, bonus to share capital. Hello. Next sir, second type of bonus. Bonus by way of converting partly paid into fully paid bonus shares. Okay. Bonus by way of converting partly paid into fully paid bonus shares, sir. Sir, here 3 entries will come, sir. Here I am giving bonus only for that unpaid amount, right? First you write a call due entry, correct? Call due entry. Okay. I mean final call due entry. Tell me, what is the due entry for call? Share final call to share capital. That's it. Share final call account debit to share capital account. First you write the due entry. Second, declare bonus. On declaration of bonus, this case bonus is given from only one source. What is that? Free reserves. So that account will be debited. Free reserves account debit to bonus to shareholders. Bonus to shareholders account. Okay. Free reserves to bonus to shareholders. Now see this. This bonus adjusted with share final call. Correct? On adjustment of final call. That means here in the second case, sir, simply for this final call we are giving bonus. This final call itself is bonus. As a shareholder you are not required to pay, company is giving you in the form of bonus. So what is the entry for adjustment? Bonus to shareholders credited, now it will be debited, correct? Bonus to shareholders account will be debit and the share final call account will be credit. Share final call, that's it. That's it, sir. So therefore what is the net entry, sir? Net entry is this, bonus to shareholders to share final call. Hello. And what you observe here is, what is the net entry here you need to observe is, your share capital has been increased. See this, to the extent of this final call. And this share final call automatically get cancelled. Bonus to shareholders automatically gets cancelled. See this. So therefore the net entry is what? Free reserves account debit to share capital. See this, this is called bonus issue. In bonus issue ultimately this is what happens, your reserves are get converted into share capital, correct? You want, you check it. So when company made the final call to share capital, when declared bonus, free reserves to bonus and adjustment, this bonus is adjusted with share final call, because as a shareholder you are not required to pay, we are adjusting you with the bonus. So that means what are the ultimate accounts remaining? Free reserves to share capital. So free reserves account debit to share capital, this is called bonus. That's why bonus issue is called what? Capitalization of profits. Just 8 minutes it is taken for accounting treatment. Accounting treatment is quite easy once you know the provisions very well. So you understand the entries. So if it is fully paid bonus shares, 2 entries will come. What are those? On declaration of bonus, what is the entry? Free reserves account debit to securities premium account debit, CRR account debit to bonus. When bonus shares are issued, bonus to share capital. Bonus to share capital. Next, second category, partly paid into fully paid. First we need to write the final call due entry. What is the final call due entry? Share final call to share capital. Next, when bonus issued, free reserves to bonus declared, free reserves to bonus to shareholders. Now this bonus is adjusted with final call. So therefore bonus to shareholders to share final call. That means what is the net entry, sir? Free reserves to share capital. That's it. So this is, you understand this? That's it. The accounting treatment is done. So this is what exactly I have given, sir. If you want you can check it also, same entries. 2 cases we have covered. So that means the entire concept of bonus issue theory has been completed. Okay. Now relating to bonus issue, see the question, sir. We completed the theory part. Let us solve the questions. Come to our question bank. First illustrations. Illustration number 1. following items appear in the trial balance of M Limited as at 31st March 2023. 60,000 equity shares of 10 each, capital redemption reserve given CRR, plant revaluation reserve given. So can we use this revaluation reserve? No, I told you any reserve created by revaluation of assets cannot be utilized. I think CRR can be utilized if it is fully paid bonus shares. Securities premium, okay, we can utilize if it is fully paid bonus shares, we can utilize. General reserve is a free reserve, right, which can be utilized if it is fully paid bonus shares. P&L account is also free reserve, which we can utilize. Now the most important point is this, see this, capital reserve they have given, sir, including 37,500 being profit on sale of machinery. Actually 1,12,500 is there in the capital reserve. In that 37,500 is because of sale of machinery. So that means it is realized in cash. It is realized in cash. When you sell the machinery, other party will make the payment. That means this profit is realized in cash. So therefore, can I say out of 1,12,500, 37,500 is realized in cash. Remaining balance not realized in cash, which cannot be used for bonus issue. Because I told you only capital reserve realized in cash will be utilized for bonus issue. Important, mark it as important. This is. Sir, are you understanding? Total 1,12,500, in this 37,500 is realized in cash. The company decided to issue bonus shares to its shareholders at the rate of 1 share for every 4 shares held. See this, 1 for every 4, 1:4. For every 4, 1 share will be given. Actually, how many shares? 60,000. So 60,000 into 1/4, correct? How many? 60,000 divided by 4. 15,000 bonus shares will be given, each one 10 rupees. So 1,50,000 is bonus. 1,50,000 is bonus. You are required to pass the necessary journal entries. It is desired that there should be minimum reduction. See this, minimum reduction in free reserves. What is minimum reduction in free reserve? That means least. Free reserves will be used lastly. First of all, tell me what is the type of bonus here? Is it bonus, fully paid bonus shares, or converting partly paid into fully paid? Fully paid bonus shares. Fully paid bonus shares, sir. Because here, see the 60,000 shares of 10 each given means generally this is fully paid. Generally this is fully paid. So therefore, on this, sir, they want to give bonus, sir. So it's a fully paid bonus shares. Now tell me, what are the entries we are going to write in case of fully paid bonus shares? First, bonus will be declared on issue of bonus. On declaration of bonus, what is the entry? First, whatever the reserves we are utilizing, we will debit. To bonus to shareholders, we will credit. Now you tell me here, in the question they said minimum reduction in free reserves. That means free reserves, general reserve, P&L account will be given last priority. First we will use what? CRR. How much? 45. Securities premium 52,500. And also capital reserve 37,500. These three I will use first. Then balance will be how much? Tell me. 15,000. That 15,000 either I can use from general reserve or P&L account. Whatever. Suppose I am using from general reserve. Sir, any combination is no problem, sir. Any combination is no problem. And then bonus to share capital. Bonus to share capital. That is the entry. So 2 entries are very simple. Say this. In the books of M Limited journal, you see. So first capital reserve they have utilized 37,500. CRR they have utilized 45. Then securities premium 52,500. Here the thing is that securities premium is realized in cash. That is the assumption. General reserve also utilized. See, this is the balancing figure, correct? 15,000 use it from general reserve. Sir, why I need to use from general reserve? I can use P&L also. You can use P&L also, nothing wrong. 2 bonus to shareholders. So being bonus declared by issuing 1 bonus share for every 4, and then bonus to equity share capital 1,50,000, 1,50,000. So what is the net entry, sir? Reserves and surplus to share capital. Correct? Now see this. Notes also important, sir. Planned revaluation reserve cannot be utilized to issue bonus shares. And also capital reserve realized in cash can be utilized for bonus issue. Capital reserve realized in cash only will be utilized for bonus issue. Hello? That's it. So first, except free reserves, use everything. Planned revaluation reserve don't utilize. Securities premium utilize. TRR utilize. Capital reserve utilize 37,500. Balance is utilized from general reserve. Alternatively, you can use from P&L also. Alternatively, you can use from P&L also. So you understand this? That's it. Now come to question number 2, illustration number 2. Very simple. Illustration number 2. Following is the extract of the balance sheet of YY Limited as at 31st March 2023. So extract of the balance sheet of YY Limited. So company balance sheet given, sir. Extract of balance sheet given. Look at the information. First authorized capital given, sir. 15,000, 12% preference shares of 10 each, 1,50,000. 1,50,000 equity shares of 10 each, 15 lakhs. Total 16,50,000. Sir, authorized capital given, sir. First. Authorized capital is just for presentation. Okay. Next, issued and subscribed capital 12,000, 12% preference shares of 10 each fully paid 1,20,000. 1,35,000 equity shares of 10 each. 8 paid up. See this. That means equity shares are partly paid up. Hello. Next, reserves and surplus you see. Capital redemption reserve, general reserve, capital reserve, securities premium, P&L account. These are reserves and surplus. Next, secured loans also there. This company has loans. What are the loans? 12% partly convertible debentures. As per SEBI guidelines, if company is issuing bonus shares, the benefit should be available for partly convertible debenture holders also. I told you. So this is the balance sheet extract of which company? YY Limited. When? 31st March 2023. Okay. Now see this. What happened? On 1st April 2023, company has made a final call at 2 rupees each on 1,35,000 equity shares. So company made a call of 1,35,000 equity shares. Actually, equity shares are partly paid, so they are now calling it 2 rupees. That means they are making the partly paid shares into fully paid. Correct? Next, the call money was received by 20th April 2023. So call money was received. Thereafter, see this, the company decided to capitalize its reserves by way of bonus at the rate of 1 share for every 4 shares held. So now they want to issue bonus shares. 1 share for every 4 shares. Sir, bonus, fully paid bonus shares or bonus by way of converting to partly into fully now? Fully paid. Because first in the question partly paid shares are there. They are making it fully paid. Now on that they are giving 1 bonus share for every 4. So that means how much is the bonus shares? Tell me. 1,35,000 divided by 4. Correct? 1,35,000 divided by 4. 33,750 into 10 rupees. 3,37,500 is the bonus amount. Correct? Bonus amount 3,37,500. Now next see. Securities premium of 37,500 includes a premium of 7,500 for shares issued to vendors pursuant to scheme of amalgamation. Important, sir. Sir, securities premium 37,500 is there na, sir? In the question, see this, in the company reserves and surplus 37,500 is there. They are saying that in this 37,500 a premium of 7,500 was included, which this premium came because we are issuing shares to vendors in pursuant to scheme of amalgamation. That means we take over some company, sir. As a purchase consideration, we have given shares to them at premium. So we recognized securities premium of 7,500. That means this 7,500 is arising from issue of shares for consideration other than cash. That means this 7,500 is not realized in cash. Therefore, from securities premium, you cannot utilize 7,500. Only remaining 30,000 will be utilized. I told you now, securities premium only collected in cash will be utilized. Here clearly said a premium of 7,500 for shares issued to vendors in pursuant of scheme of amalgamation. That means we are purchasing a business, for that we are issuing shares. That means we are not receiving any cash. So, but we are issuing shares at premium. Because of that 7,500 securities premium created in the books. So, this premium which is not realized in cash, generally we will not utilize as per SEBI guidelines. Everybody important. And also one more important point, sir, see this. Capital reserve include 60,000. That, sir, this is 60,000. Remove 10. Capital reserve includes 60,000 being profit on sale of plant and machinery. Okay. So that means the entire capital reserve, how much is there? 1,12,500 is there. In that 60,000 is what, sir? Because of sale of plant and machinery. That means only 60,000 realized in cash, remaining not realized in cash. Therefore, in this 1,12,500, only 60,000 will be utilized for bonus issue. Remaining we will not utilize. Hello? Because only 60,000 was because of the profit on sale of machinery. That means amount realized now. When you sell the machinery, you are going to receive the amount. Therefore, this capital profit is realized in the form of cash. So only 60,000 is realized in cash. Next, 20% of 12% debentures are convertible into equity shares of 10 each fully paid on 1st June 2023. Sir, partly convertible debentures, sir. This company is having partly convertible debentures. See this 7,50,000. Correct? How much is converted into equity shares? 20%. How much? 20%. Given. See this. 20% of 12% debentures are convertible into equity shares. When it will be converted? 1st June 2023. Okay. Now what they are asking, say this. Show necessary entries in the books of company. So in the books of company, they are asking us to show the necessary entries and prepare the extract of balance sheet immediately after bonus issue. But before conversion of debentures. Before converting debentures into shares, after bonus issue, you need to show the balance sheet extract. In first chapter also we have prepared one extract. How in the balance sheet the share capital will be presented, like that. Next, are the convertible debenture holders entitled to bonus shares? Answer is yes. Answer is yes. See this theory question they have asked. So we need to pass the entries, sir, in this case. So tell me, sir, first of all, what kind of bonus is this? What kind of bonus? Fully paid bonus shares. But the given shares are partly paid. First we need to make them fully paid. Once you make them fully paid, on that we are giving bonus. Sir, I think still you are not getting the point. The moment you see partly paid up shares, don't come to conclusion that the remaining amount they will give in the form of bonus. Here the concept is how much bonus company wants to give. Clearly said, 1 share for every 4 shares. That means it's a fully paid bonus share. But to give fully paid up shares, I told you first existing shares must be converted into fully paid. Therefore here first 2 rupees will be called. When they called, sir, 1st April, see this, 1st April company called 2 rupees and 20th June they paid. That means shares are become fully paid. Now they given bonus issue on that. That means these are fully paid bonus shares only. So therefore what entries you will write, tell me? First column, call due entry, call due. So share final call account debited to share capital. Then amount received, bank to share final call. Next bonus declared. Bonus declared. So whatever the bonus declared, you have to utilize from either free reserve, securities premium or CRR. Debit account debit to bonus. Bonus to equity share capital. That's it. Bonus to equity share capital. And conversion of debentures into equity shares is happening on 1st June. See, I don't require to write the entries. I want only necessary entries in the books of the company, and I need to prepare balance sheet after bonus issue, but before conversion of debentures. So conversion of debentures entries and all not required, sir. Okay. So let us start doing, sir. Very simple question this is. What is the question number? 2. Come on. Illustration 2 will get completed very quickly. So in the books of company name YY Limited. So journal entries, correct? So date, particulars, debit rupees, credit rupees, correct? Okay. Now first company made a call, final call. When they made it? April 1st, April 1st 2023. So 2023 April 1st company made a call. So share final call or equity share final call, because in the question we have equity plus preference. So in order to separate it, I have writing equity share final call account debit to equity share capital account. So 1,35,000 into 2 are 2,70,000. 2,70,000 sir. 2,70,000, 2,70,000. Narration you have to write sir. Being calls made, 2 rupees on 1,35,000 shares was made. Call amount made. Okay. Now relating to this call, we have received the amount. When the amount is received sir? 20th April. Given. Say this. April 20th we received the amount. So when we receive, what is the entry sir? Bank to equity share final call, right? Equity share final call account. Okay. Equity share final call account. Total amount received sir? 2,70,000, 2,70,000. Now the shares has become fully paid, equity shares. Now company has declared what? Bonus. Now when this bonus is declared sir? Say this. Thereafter the company decided to capitalize its reserve by way of bonus at the rate same day. Hello. So April 20th bonus declared. Now the important thing is here, bonus company wants to give fully paid bonus shares. Free reserves we can use securities premium or CRR, but you have to be very careful sir. So first I am using differences. I am using first CRR sir. I am using CRR. I told you logic also, because CRR is waiting only for one purpose. What is that? Fully paid bonus shares. So therefore better you utilize CRR. Not that compulsorily, but better. So CRR 30,000 now. Huh? CRR 30 only. Yes. Next, can I use capital reserve? But capital reserve, how much is realized in cash? 60. So capital reserve 60,000 you use sir. And also securities premium. Securities premium, we have 37,500 is there. In that 7,500 is not realized in cash. So therefore 30,000 I will take, correct? So these two are important. Okay. So this is capital reserve only realized in cash I am using. Securities premium also realized in cash. 37,500 minus 7,500 only realized in cash. And by the way, in this question I am giving you 1,35,000 divided by 4. That means 33,750 bonus shares, correct? Into 10. So that means 3,37,500. Actually that I need to credit to bonus to shareholders, right? So bonus to shareholders account 3,37,500. Now you see this 3,37,500 minus 30 minus 60 minus 30. Still I want 2,17,500. Correct? Now what are the things left out sir? CRR I used, capital reserve I used, securities premium used. I have left with general reserve as well as P&L. Now first go to general reserve. How much is there? 1,80,000. Use it. General reserve 1,80,000. What is the balance required? 37,500. Take this from P&L account. Take this from P&L account. Balancing figure. Now this is where the students will get a doubt. Sir, some students will ask, sir, why you are using only this order? Why can't you first use P&L account? Yes, you can. Who said it can't be done? Because the act says free reserves, securities premium, CRR. Any combination is okay. But the best thing is that free reserves, so common sense, free reserves you can use for any purpose. Why waste unnecessarily free reserves? So other than free reserves, if they are eligible, first use them. Because free reserves you can use for any purpose, na? That's the intention. Please understand. Hello. That's why I am using first CRR, because CRR does not have any other purpose. CRR does not have any other purpose except to use for bonus issue. That's why first I am using CRR. Then capital reserve, which is realized in cash. Then securities premium, because these are all have limited purposes only. These are all have limited purposes. General reserve, P&L account are free reserve, which can be used for any purpose. That's why. Hello. Bonus declared appa. Next, bonus issue. So when bonus is issued on the same day, April 20th, bonus to shareholders to share capital, correct? Bonus to shareholders account debit to equity share capital account. How much? 3,37,500. 3,37,500. I think that's it. Any other entries required? Not. But now we need to prepare what? Extract. Extract we need to prepare, sir. Prepare the extract of the balance sheet immediately after bonus issue. So after the bonus issue, we need to prepare the extract of balance sheet. I repeatedly am saying number of times, we yet to discuss a chapter called share capital, preparation of financial statements of a company, schedule 3. But before going to discuss that complete schedule 3 format, here and there, like for example in bonus issue, they are asking just extract of balance sheet. So I am giving you brief idea about what is that balance sheet, because here very limited items to present. Actually I told you even in first chapter also. First, balance sheet of the company generally divided into two parts: equity and liabilities, assets. In equity and liabilities, first we have shareholders fund. In that share capital, reserves and surplus. And then liabilities, we have non-current liabilities, current liabilities, like that. Okay. Now here extract only they are asking. Extract means not complete balance sheet, not possible. Based on the information given, we need to present. Hello. And also I told you, sir, balance sheet when you prepare generally, you will have a notes to accounts, where in the notes to accounts you will give a detailed information. Okay. Now in this case, suppose if I prepare extract, sir, how I am going to do this? So balance sheet of, what is the name of the company? YY Limited, as on 30th March. Actually entire thing is completed April 20th, right? April 20th. Hello. They have not actually mentioned the date, but they are asking prepare the extract of the balance sheet immediately after bonus issue. So that means it is April 20th. Everybody. So 20th April 2023. Okay. So this is only extract pa. This is not a complete balance sheet. So generally how it will be prepared? The format is particulars, note number, amount, rupees. Okay. In particulars, the first category is, or no need to mention particulars also, just you write equity and liabilities. Okay, this is the first part of the balance sheet. In equity and liabilities of the company, first head is what, sir? Shareholders funds. Shareholders funds. In shareholders funds, first I will write share capital. For this, note number 1. Next, reserves and surplus. For this, note number 2. Okay. Reserves and surplus, note number 2. So in the question, based on the information given, definitely we have share capital and then reserves and surplus. After bonus issue, what is the position of these two? We need to. And the breakup is given in the notes. And also if you see the questions here, liabilities also we have. This company has given a liability also. One liability is there. What is that? Secured loans, debentures, partly convertible debentures. Basically this is called non-current liabilities. Debentures are basically long-term liabilities. In the language of the schedule 3, they are called as what? Non-current liabilities. In non-current liabilities, we have long-term borrowings. We have long-term borrowings. Long-term borrowings. So according to Schedule 3, sir, liabilities are two types: current, non-current. So debentures, basically loans, debentures, these are all long-term liabilities. So that's why non-current liabilities, long-term borrowings we need to show. For this, give note number 3. Note number 3. So now prepare notes to accounts. Notes to accounts. Notes to accounts, sir. This is a simple extract. Only these 3 items are there. Notes to accounts. What is the first note, sir? First note is for share capital. Now always when we are presenting share capital, first we need to present authorized share capital. Which share capital? Authorized share capital we need to present. Authorized share capital. So first I am presenting authorized share capital. According to Schedule 3, authorized share capital we need to present, sir. So in the question, authorized capital given, sir, given, you see, 15,000, 12% preference shares of 10 each. Equity shares 1,50,000 equity shares of 10 each. But here one important thing, sir. Your authorized equity share capital is 1,50,000, sir. But your issued and subscribed is 1,35,000. Now you are issuing a bonus of 33,750 shares, correct? Bonus shares. On this 1,35,000, for every 4 you are giving 33,750. That means 33,750, 135. So it will be 1,68,750, correct? 168,750, which is more than authorized capital. Can issued and subscribed capital be more than authorized capital? No. Anytime I told you authorized capital is the maximum capital a company can issue. The issued and subscribed capital cannot exceed authorized capital. It should always be equal or below. So here you need to check, because of the bonus issue, the issued and subscribed capital of the company is increasing to which is much beyond the authorized capital. So therefore what we need to do? We need to increase the authorized capital also. So we need to increase the authorized capital also. So therefore when you are presenting authorized capital, sir, first take preference share capital. Preference share capital will not change, na? 15,000, 12% preference shares of rupees 10 each. See, you have to present like this. Some students are presenting 15,000 into 10. You should not do that. You have to write 15,000 comma 12% preference shares of 10 each. Okay, how much? 1,50,000. Hello. Next, equity share capital 1,50,000 equity shares of 10 each, but now it will become how much? 168,750. 168,750 equity shares of rupees. How much? 10 each. How much? 16,87,500, correct? Oh no. Hey, one minute here. 1 minute. Here, when you are presenting authorized capital, there are two ways. Listen, there are two ways. One way is how many bonus shares you are issuing, na? Increase authorized capital by that much. Or the minimum is increase authorized capital at least equal to the issued and subscribed capital after bonus issue. That means 33,750 bonus shares you are giving, na? Your existing authorized capital how much? 1,50,000. Whatever you are giving in the form of bonus, na, just increase it. So then it will become 183,750. 183,750. You increase this 183,750. This is one possibility. Or at least increase that much required. Minimum required. Minimum required is what? Authorized capital at least equal to issued and subscribed capital. Okay. Anyways, I'm changing here. If you want, you can do like this also. But to comply with the answer given, so 183,750, correct? You got how to say 1,50,000 original shares plus bonus 33,750 I increased authorized capital. So now my authorized capital is 183,750, correct? Into 10. How much, sir? 18 1837,500. Okay. Now total. So it will be 1987,500. So this is only presentation, sir. Okay. But sir, in the answer which is given in the study material, what this fellow has done is, see here, he has made this 187,500, not 183 750. What he has done, originally the authorized shares 1,50,000, right? Suppose on this bonus issue given, 4 shares 1 will be given. How much? 1,50,000 divided by 4, 37,500. To this extent he has increased it. Hello, but that is wrong. Total also wrong. 187,500 into 10. This is 18,75,000. Correct? 1,50,000. Okay. I don't want to correct this. If it will be a big thing, I will do simply. Okay. So this way you do. Okay. Actually, the best way is that whatever the bonus you are giving, increase that extent. Here bonus is 33,750, increase that much. So authorized capital next issued and subscribed and paid up also. Paid up capital. Tell me. Preference shares, how much issued? 12,000. It is not changing, correct? So 12,000, 12% preference shares of rupees. How much? 10 each. Fully paid. How much? 1,20,000. Now equity shares. Already how many issued? 1,35,000 plus bonus 33,750. Total 135 plus 33,750. 168,750. So 168,750 equity shares of rupees 10 each. Okay, fully paid. Already issued plus bonus pa. Both will be added. 168,750 into 10. How much? 16,87,500. Now see, schedule 3 says whenever you issued shares for consideration other than cash, give a note. So therefore, here we need to write out of the above, how many shares are issued as bonus? 33,750 equity shares of rupees 10 each. 10 each issued by way of bonus. Okay, that's it. This note point why you have written, sir? Because of schedule 3. So schedule 3 says whenever any shares are issued for consideration other than cash, we need to write a note. Now you make a total. 18,07,500. Sir, what will be the total capital, sir? Total capital. What will be the total capital? Please tell me total capital. Total capital. Tell me. What is the total capital? Total capital, sir. Total capital. Total capital. Tell me. 37 lakhs. 95,000. Find out one small pound water, dive into that. No use at all. I intentionally asked total capital. I know what you tell. You will add both. Whenever you see figures, you will add. That kind of mindset you guys had. Not using brains at all. This authorized capital is only for presentation purpose. This is the actual paid up capital. Authorized capital within the authorized capital, some shares we issued, we collected the amount. Only paid up value from the shareholders is part of share capital. Authorized capital is only for presentation purpose. Add means you should not add both. This authorized capital is only for presentation. Come on. LK gist of this is 18,07,500. So therefore in the balance sheet you write 18,07,500. Yeah, Daivame. So don't add authorized and this. Authorized capital we will not consider for total purpose. The capital of the company is its paid up capital only. Authorized capital is only for presentation. Don't add. Intentional I asked what is total capital. I know what you do. I want you to do that mistake because you will not forget now. So therefore only paid up capital will be taken. Now what is the second note? Reserves and surplus. Horrible. Reserves and surplus. Tell me what are the reserves we had. First CRR is there, but CRR completely utilized. So it will not be there after bonus issue. Correct? CRR 30,000 utilized. Next. Capital reserve. Capital reserve 1,12,500 is there. Correct? Originally. How much used? 60,000 minus. Remaining balance will be there. How much? 552,500 pa. Next securities premium. Total 37,500. How much used for bonus issue? 30 we used. Check the entries. So how much balance remaining? 7,500. Correct? Next. P&L account. General reserve is also there. Hello? General reserve utilized fully. So next P&L account. P&L account how much balance is there? 2,70,000. How much used for bonus? 37,500. Tell me what is the balance? 2,32,000. That's it. Any other item? No. Make a total. 52,500 plus 7,500 plus 232,500. 2,92,500. That's it. Write this in balance sheet. 292,500. 292,500. So after bonus issue, what adjustments have been done in the bonus issue? Minus it. And last, we have one more item. What is that? Long-term borrowing. Correct? In that long-term borrowings, we have secured loans. Correct? Look at the information given. Secured loans. So you also write secured loan. And the secured loan is nothing but what? I think 12% partly convertible debentures. Correct? 12% partly convertible debentures. How much? 7,50,000. Hello? 7,50,000. Sir, when they got converted into equity shares? Sir, this partly convertible debentures are get converted into equity shares when? 1st June. Now you are preparing balance sheet on 20th April. Therefore, no conversion should happen on the balance sheet date. So therefore, you keep this at 7,50,000 only. Everybody. Because by the time we are preparing this balance sheet, conversion didn't happen. So write this 7,50,000 here. 7,50,000. That's it. So extract is done. Extract is done, sir. So what will be the total, sir? 1 minute. I won't wait. I will do myself. 28,50,000. So I saved almost 90% of the time. 28,50,000, sir. That's it. So this is how the extract of the balance sheet is prepared, sir. You understand this? And if you see the solution of this question, sir, in the guidelines clearly given, sir, capital reserve realized in cash is utilized for bonus issue. As per SEBI guidelines, securities premium collected in cash only utilized for bonus issue. These points are all I covered in theory. Important. And as per SEBI guidelines, I told you even that convertible debenture holders are also eligible for bonus issue. Hello. So that's it. So therefore you see here, actually issue of bonus shares to equity shareholders 2,25,000. Issue of bonus shares to be issued to debenture holders after conversion 25,000. Because if you see the total debentures, it is 7,50,000, right? In that 20%, 7,50,000 into 20% means 1,50,000. Correct? So see this. 1,50,000 divided by 4, because every 4 shares 1 share. 37,500. No. First total debentures, how much? 7,50,000, 100 each. Correct? Partly convertible debentures. Out of this, how much will be converted? 20% of the 12% debentures is converted of rupees 10 each. Here, sorry, this point, what they are telling now, in the study material, authorized capital increased by 2,50,000 assumption that they have taken. So, how they got this, they are explaining. Okay, anyways, my request is, please avoid this point from here. Don't make complicated assumptions. Just simply whatever bonus you are giving, not to the extent increase it. But the question arises, if you are a wise student, you can ask the doubt, but you are very kind. What is the doubt is, sir, in this question convertible debentures also there. You said bonus benefit is also applicable for them. That means when they exercise the conversion option, we need to give bonus shares to them also. Then also issued capital will increase. So will that also be, to that extent authorized capital will also be increased? Yes, we have to increase if required. Okay, but no need, sir, because already our authorized capital is 1,50,000 only. We issued 1,35,000. Now another 33,750 we are increasing. So no problem, I think. Okay, anyways, this is the question, sir. You understand this? Now come to illustration number 3, sir. Another great question. So this question, the speciality of this question is they are mixing per feature, bonus issue, right issue, everything mixed. Mixing. Okay, juice. Suppose if they want to test you 3 chapters, right issue, bonus issue, first chapter, they will give this question. Then maybe Ayyappan will object this. No, sir, how can they do like this? Because I prepared only first chapter. Third chapter I took lightly. They are giving combination sums, means that combination will not work for me. But the person who is correct, he is giving the paper. Now we can't stop him. He will test. Because what that fellow will do, the paper is only for 50 marks. The syllabus is huge. So therefore, instead of giving each chapter one question, what he will do, he will combine 3 chapters and he will give. Even in rights issue also, you see, we have solved one question. For feature, right issue, he mixed. Like that. So therefore, you fix mixing questions will be there. 2 or 3 concepts, 3 chapters, actually they will mix. See, actually, institute material point of view, if you see, entire accounting for shares and debentures is 1 chapter only. Our point of view, we divided. Their point of view, for feature, right issue, bonus issue, redemption of preference shares, buyback, these are all 1 chapters only. ESOPs, sweat equity shares, these are all 1 chapter only. So therefore, their point of view, you should have a interlinking knowledge also. That's what they are expecting here. Okay. So, illustration number 3. See this. The following is the balance sheet of RR Company Limited as on 31st March 2023. RR Company balance sheet, sir. Look at this balance sheet of the company. Issued and paid up capital 2,25,000 equity shares of 10 each fully called up 22,50,000 less calls in arrears 50,000. 1 lakh equity shares of 10 each 4 paid up 4 lakhs. Actually, see here, two class of equity share. Within the equity shares only two categories is there. First 2,25,000 equity shares of 10 each fully paid. In that there is calls in arrears also. 25,000 shares of 2 each calls in arrears is there. Second 1 lakh equity shares of 10 each 4 paid up. That means one is fully paid, another one is partly paid up. Okay. They have P&L account, dividend equalization reserve, which is also a free reserve, general reserve, development rebate reserve, capital reserve, securities premium, CRR, current liability. So this is the liability side, sir, of the company. Now come to asset side, sir. Non-current assets like fixed assets, current assets, cash at bank. Okay. Now see, this is the balance sheet of RR Company on 31st December 2023. Okay. Now say this, the board of directors of the company took the following decisions. So they have taken some decisions. What are the decisions they have taken, sir? Say this, to forfeit the shares on which final call of ₹2 each is due. So they want to forfeit the shares. How many shares they want to forfeit? 25,000. See this, these shares are there, na? Calls in arrears. They want to forfeit those shares. Okay. Next, they want to issue fully paid bonus shares at ₹1 fully paid up share for every 2 fully paid up shares held. So bonus issue they want to give. Fully paid bonus shares at ₹1 fully paid up share for every 2 shares will be given as a bonus shares. Everybody. Next, to pay bonus to the partly paid shares at an equivalent rate as in B above without collecting any amount from the related shareholders. Actually, sir, if you observe the question carefully, sir, B point is talking about fully paid bonus shares. See this, to issue fully paid bonus shares of ₹1 at 1 fully paid bonus share for every 2. C point is talking about bonus by way of converting partly paid into fully paid. See this, pay bonus to partly paid shares at an equivalent rate as in B above. At an equivalent rate. How we are giving fully paid up bonus shares, in the same rate we will give bonus to the conversion by way of partly paid into fully paid without collecting any amount from the related shareholders. Actually, these 2 points are the important points. You have to read it carefully. First of all, understand in the question there are equity shares 2,25,000 fully called up, 1 lakh 4 paid up. So therefore this is 2,25,000. In this 25,000 shares not paid, ₹2 not paid. Therefore we forfeit them first. And this shares only ₹4 paid up. That means ₹6 yet to pay. They are partly paid up shares. On this they are giving bonus. On this also they are giving bonus. So 2 categories they are giving bonus. Hello. Now next you see, to reissue the forfeited shares at 12 each fully paid up. So they are giving they are reissuing the forfeited shares. Okay. And also they will pay dividend equivalent to 10% on share capital including bonus shares. So dividend they are paying to the shareholders, 10% dividend. Okay. Next, to issue right shares in the ratio of 1 fully paid up share for every 4 existing fully paid up shares at ₹15. To use minimum balance from P&L account. Minimum balance of P&L account. That means when we are giving the bonus, minimum balance has to be utilized. Say this, all capital reserves are realized in cash. That means we can use for bonus. Now, important point, 1/5 of the development reserve is free reserve. 1/5 of the development reserve is free. That means in the question we have a development rebate reserve, sir. How much, sir? 2,50,000. In this 2,50,000, 1/5 means 50,000 is free. That means we can use it for bonus issue. Okay, that's a free reserve I am saying. Pass necessary journal entries in the books of the company, including cash transactions after the above decisions are implemented. So they're asking us to pass the necessary entries, including cash transactions of the above decisions are implemented. First of all, tell me, in this question, what are the decisions taken by the company? Tell me. Totally, first decision, forfeit the shares. How many shares we need to forfeit? 25,000 shares. 2 rupees not yet paid. Calls in arrears. Those shares will be forfeited. So forfeiture entry we will write. Second, fully paid bonus shares will given. In what rate? 1 fully paid for every 2 fully paid up shares. Next, third, here bonus by way of converting partly paid into fully paid. In what rate? The rate which is given to fully paid bonus shares. Same rate. See this, equivalent rate. Okay. Then reissue of forfeited shares. We need to reissue the forfeited share. Okay. And then dividend. And then right shares. And then minimum use of the P&L account. Okay, let's do this. Interesting question actually this is. So first, what we will do? We'll start writing entries. Illustration number 3. So in the books of RR Company Limited, journal entries. So date, particulars, debit rupees, credit rupees. Okay. Now see one by one carefully we will do. First, date not there, so I am following normal this one. First, forfeiture. We know how to do accounting for forfeiture. Whenever forfeiture happen, what is the entry? Share capital account debit to share forfeiture to calls in arrears. Here shares are issued at par only, na? No premium. So therefore, what is the entry? Share capital account debit. Which share capital, sir? Equity share capital. Hello? Equity share capital account debit. Equity share capital. How many shares? 25,000 into what is the total called up amount till now? 10 rupees. Correct? 2,50,000. 2 shares forfeited account, right? Shares forfeited account is created by amount paid. 25,000 shares, they have not paid 2 rupees. That means how much they paid? 8. So 25,000 into 8, 2 lakhs. Remaining calls in arrears. Already there, calls in arrears. In the books itself, balance sheet. How much? 50,000. 25,000 into 2. Hello? So therefore, first forfeiture entry, everybody understood? First chapter. Very simple. Equity share capital to shares forfeited to calls in arrears. Now second decision, what is the decision you tell me? Fully paid bonus shares. Okay. Now you tell me, fully paid bonus shares they have given. Just for your knowledge I am writing, sir. This fully paid bonus shares, that is bonus to shareholders, we have to credit, right? Bonus to shareholders. Debit will be given to the respective reserves and surplus. How much bonus shares you will give, tell me? For every 2 fully paid shares, 1 fully paid up share will be given. Total how many shares? 2 lakh 25 or 2 lakhs? 2 lakhs only, because out of 2 lakh 25 cancelled. So 2 lakh shares will be there, correct? So 2 lakh shares, what is the ratio? For every 2, 1 share will be given into 10 rupees each share. Hello? So therefore, the total bonus issue will be 10 lakhs. This is important, sir. Company is giving bonus to shareholders, sir. So when bonus is given, sir, fully paid bonus shares, sir. Total 2,25,000, in the 25,000 cancelled. So 2 lakhs only fully paid bonus shares. For every 2 shares, 1 share will be given at rupees 10 each. Now this 10 lakhs I need to utilize from 3 sources I have as per the act. What are the sources I can use? Free reserve, securities premium, CRR. Correct? So CRR is there. Yes, 4 lakhs. Use it. CRR account debit. I am using 4 lakhs. Next. Any capital reserve? 1,50,000. Can I use capital reserve here? Because capital reserve, is it realized in cash? Yes, given in the question note point, entirely realized in cash. How much capital reserve? 1,50,000. Next, securities premium is also there. Can I use? Yes. Securities premium. How much is there in securities premium? Securities premium 2,50,000. Use it. Assuming it is realized in cash, genuine. Now next, development rebate reserve, like that one reserve is there. He said 1/5 of the development rebate reserve is what? Free. So therefore 2,50,000 into 1/5. 50,000 you use it from it. Because in the question clearly said, sir, minimum use should be done from P&L account. That's why P&L account I will use at the end if necessary. Hello? So total 10 lakhs, sir. 4 lakhs minus 1,50,000 minus 2,50,000 minus 50,000. So still how much I required? 1,50,000. General reserve is there na? 1,50,000, use it. So general reserve account, it's a balancing figure, 1,50,000. Now exactly it is sufficient. No need to use from P&L account. Correct? So that's it. So reserves and surplus to bonus to shareholders. So bonus declared. Now bonus declared, bonus issued. Bonus shares issued means bonus to shareholders to share capital. Correct? Bonus to shareholders account debit to equity share capital account. How much, sir? 10 lakhs, 10 lakhs. 10 lakhs, 10 lakhs. That's it. So therefore this is the entry. So I'm giving one segregation, sir. See this. This is for feature entry first. Next, this is fully paid bonus shares. Now second, what are the next decision they have taken, sir? They want to give bonus to partly paid shares also. In what rate, sir? At an equivalent rate in B above. In B above, what is the rate, sir? For every 2 shares, 1 share is given. In same manner, to the partly paid up shareholders also, we want to give bonus. Actually, this is the very, very interesting point. See this. Partly paid up shares, first of all, tell me, partly paid up shares, how many shares are there? Look at the balance sheet and tell me. Partly paid up shares, sir. 1 lakh, sir. 1 lakh is there. Correct? 1 lakh. What is the paid amount? 4. 4 amount is paid. Correct? What is the unpaid amount? 6. Tell me now, how much bonus we need to give? 6, entire 6 will be given bonus. Because he said, read the carefully. To pay bonus to partly paid shares at an equivalent rate as being above. Equivalent rate of being above. Actually, B above means fully paid bonus shares. Fully paid bonus shares is given in which ratio? Fully paid bonus shares are given in 1:2 ratio. The same rate we need to follow here. 1:2. 1:2. That means for every 2 shares, 1. Correct? For every 2 shares, 1 will be given. Every 2 shares, 1 will be given. That means, see this. If I divide this unpaid into 2 parts, because every 2, 1 will be given. 6 divided by 2, how much? 3. So 3 rupees will be the bonus. 3 rupees will be the bonus. Sir, understanding? 1:2 ratio, sir. Same rate if I need to follow here also. 6 rupees is the unpaid amount. If I divide into 2 parts, 3 rupees each part. So what that part they will give. Then it will be 1:3, 1:2. See, 3 rupees is to 6. How much it is? 1:2. If you don't understand this, it will be very difficult. You understand this, same rate we followed. So here what is the bonus? 3. So therefore what is the total bonus share capital? Bonus share capital is 1 lakh shares into 3 rupees. Sir, one small mistake. Please listen. 1 lakh into 3 if you do, it will be 3 lakhs. I think one small correction I will do here. Everybody please think. One small correction I will do. Hello. See this. For example, sir, what is the ratio in which fully paid bonus shares are given? 1:2. That means total how many parts? 3. 2 parts, 1 bonus, 3. Now for example, this unpaid amount also, if it consisting of 3 parts, it is consisting of 3 parts, what happens, tell me? 6 divided by 3, 2. 2 sir, 2. So therefore 2 rupees is to 4 rupees. It will be 6. So it will be 1:2. It is 1:2. So sir, what I am saying is unpaid amount is 6 rupees, na sir? And how the fully paid bonus shares are given? 1:2 na? 1:2. For every 2, 1 rupee is given as bonus. For example, for every 2, 1 is given. Same ratio if I follow here, what happens? 6 rupees, if I divide into 3 parts, 2 rupees, 2 rupees, 2 rupees. 2 rupees is to 4 rupees. For every 4, 2 rupees bonus they have given. Like that. So therefore, it will be 1:2. Everybody. So therefore, what will be the bonus share capital? Can you tell me? 1 lakh shares into 2 rupees. So 2 lakhs will be the bonus. 2 lakhs will be the bonus. Sir, you understand this? 1:2 ratio we are following, sir. Same ratio you follow here. Or else I can tell in a more simple manner also. That simple manner is simple. See this. What is the unpaid amount? 6 rupees, correct? What is the ratio? 1:2 na? In this 1:2, what is the bonus? 1. Bonus is this only na? So therefore, bonus is equal to 6 into 1/3. 2 rupees is the bonus. Hello. Sir, unpaid is 6, sir. We are following 1:2 ratio, sir. So 6 into 1/3. 6 into 1/3. So how much bonus? 2 rupees. That is what. You understood? Okay. So bonus. First one I forgot to tell you this. So that's why I divided 3 I done. That is a mistake. So correct it please. Okay. Now you tell me, sir. What is the entry for this bonus? The bonus by way of converting partly paid into fully paid. First, we will make the, this amount, call amount due, and then bonus declared. Both will be adjusted. That's how entries will be passed. Correct? So therefore, the entry is equity share, call account. Call account, debit to equity share capital account. How much? 1 lakh into 2. Correct? Bonus is 2 rupees. 2 lakhs. 2 lakhs. Equity share call to equity share capital. Next, bonus declared for this 2 lakhs. Bonus to shareholders will be created. 2 lakhs. Now this bonus will be given from, this is bonus by way of converting partly paid into fully paid, will be given wholly from free reserves. Now tell me what are the free reserves available? Actually, what are the things already we used, sir? CRR we used, securities premium used, capital reserve used, development rebate reserve fee also used, general reserve used. So what is the balance left? Dividend to P&L. So first I will use dividend equalization reserve because minimum utilization from P&L, and both are free reserves only. Hello. So to give bonus by way of converting partly paid into fully paid, we need to use only free reserves. So what are the free reserves here? Dividend equalization reserve. How much amount is there? Dividend equalization reserve 1 lakh. Use it. Still how much I want? 1 lakh. I will use it from P&L account. Minimum utilization. So important. That's it. Now this bonus will be adjusted with the call. Correct? So bonus to shareholders account debit to share equity share call account. How much, sir? 2 lakhs? 2 lakhs. I want every one of you to understand this. This is important. You understand this? So partly paid up shares. First bonus declare call amount written, then bonus declared, then adjusted. So this is also completed. Next one, reissue of forfeited shares. So reissue of forfeited shares, sir. When forfeited shares are reissued, at what price we are reissuing, sir? 12. That means there is no loss, no discount. Therefore, nothing to adjust to share forfeiture account. So what is the entry here? Bank account debit. Bank account debit to equity share capital account, right? How many shares we are reissuing, sir? 25,000 forfeited shares into 12 rupees. In this 25,000 into 10 will go to share capital. Remaining will go to securities premium. 25,000 into 2. Correct? Because whenever we issue shares at premium, we need to book securities premium. So securities premium is 50,000. Share capital is 2 lakh 50. So total 3 lakhs. Correct? That's it. So reissue of forfeited shares. One more thing we need to do. What is that? Profit. So profit on reissue, sir. Entire amount in the share forfeited account is profit. Correct? Hello? Because there is nothing, no discount on reissue. So share forfeiture account debit to capital reserve account. How much? Share forfeiture account, how much balance is there? 2 lakhs. Correct? So entire 2 lakhs will be transferred to capital reserve. All shares are reissued, sir, and there is no discount. So therefore entire share forfeiture account is a profit, capital profit, that is transferred to capital reserve. Everybody? Okay. Next, sir, reissue is also done. Next, pay dividend. Dividend we need to pay, sir. How much dividend we need to pay? 10% on share capital including bonus shares. So tell me how much dividend you are going to pay. How much dividend you are going to pay, sir? How much dividend you are going to pay? First of all, whenever a company gives a dividend, sir, dividend will be given from profits, sir. So P&L account debit to equity dividend. This is the entry. P&L to dividend, sir. P&L account debit to dividend account. P&L account debit to dividend. So tell me how much dividend will be given. 10% on share capital including bonus shares. Including bonus shares, we need to give dividend, sir. Hello. So therefore, if you check, sir, properly from the beginning, what is the total capital, issued capital? If you say 2,25,000, in that 25,000 was forfeited, but again reissued. So it is 2,25,000. Correct? And this 1 lakh shares. Okay. Now see, dividend we need to calculate, right? So tell me how much amount is the share capital. On share capital we need to apply 10%, right? What is the share capital of this company? Originally given how much? 22 lakh 51. Correct? And then 1 lakh equity shares of 10 each, 4 lakhs. So see this, 22 lakh 50 plus 4 lakhs. Next, what happened? See this. Share capital reduced because of forfeiture, how much? Minus 2 lakh 50. 22 lakh 50 plus 4 lakhs minus 2,50,000 plus 10 lakhs bonus issue. Next 2 lakhs. Hello. Next 2,50,000. So it is 38,50,000, sir. 38,50,000. So 38,50,000 into 10%. How much? 3,85,000. 3,85,000. Hello. Sir, how you got this, sir? Simple, sir. Take your calculator. Find out the total share capital. How, sir? Simple. 2,25,000 you take first. 22,50,000. Sir, some students will ask me, sir, in this 22,50,000, this 25,000 shares amount is, let it be, because we are forfeiting na, we'll minus it again. So first take 22,50,000 and then 4 lakhs. So 22,50,000 plus 4 lakhs. How much? 26,50,000. Next to make the adjustments, what happens? See this. Here share capital reduced, minus 2,50,000, 24 lakhs now. Next 10 lakhs add bonus, 34 lakhs. Next bonus by way of converting partly paid into fully paid, 2 lakhs add. Wherever equity share capital is there, adjust it. Next reissue, 2,50,000. So 38,50,000. Simple, common sense. So 38,50,000 into 10%. You understand? Now pay the bonus. Pay the bonus. If you pay, what is the entry? Equity dividend to bank. Equity dividend to bank. First dividend is given from the profits. So profits to dividend. Then equity dividend to bank. How much, sir? 3,85,000. 3,85,000. So that's it. Bonus, dividend also done. Next, sir, next decision. Rights issue. One fully paid up share for every 4 existing which shares? Fully paid up shares. 4 existing fully paid up shares. So tell me, here right shares company is issuing, sir. How many right shares company will issue? Tell me. Can anybody tell me? Whenever right shares are issued, bank account debit, and we are issuing at 15 rupees, so securities premium will come. So can you tell me, right shares, how many right shares will be given? Right shares. What is the ratio? 1:4. 1:4. Every fully paid up share, see this, every 4 existing fully paid up shares will get 1 fully paid up share. 1 fully paid up share. Tell me, what are the fully paid up shares here? 2 lakhs in this. Hello? Originally 2,25,000. In that 25,000 cancelled. Again reissued, na? Again reissued. That means fully paid. Hello? So fully paid is 2,25,000. 1 plus bonus shares. Bonus shares we have issued, na? That is also fully paid. Bonus share 10 lakhs. See this. 10 lakhs means 10 lakhs divided by 10, 1 lakh. So 2,25,000 plus 1 lakh, 3,25,000. Sir, this 1 lakh shares you should not take because it is partly paid. Out of 6 rupees, only 2 rupees are giving bonus. Still some amount is unpaid. Sir, here fully paid up shares, for your understanding I am writing, fully paid shares are 2. One is 2 lakhs original shares plus shares forfeited and reissued, that is 25, plus bonus 1 lakh. So total, see, this is bonus shares, this is forfeited and reissued shares, this is the original shares. So total 3,25,000 shares. If you want, you can check it. 3,25,000 shares. Now right shares will be given in 1:4 ratio. Therefore right shares is equal to 3,25,000 into 1/4. 81,250. This is the right shares. It is given at 15 rupees. So 81,250 into 15. 81,250 into 15. How much, sir? 12 lakhs 18,750. 81,250 into, in this 10 rupees is the face value. So 8 lakhs 12,500 will go here. 81,250 into 5 will go to securities premium. How much, sir? 4 lakhs 6,250. That's it. You understanding this? Most of the students problem is they don't read the question carefully. Read. For every 4 fully paid shares, 1 share will be given. How much is the fully paid shares? Originally 2,25,000. In the 25,000 cancelled but reissued. So therefore, fully paid shares in the category is 2,25,000 plus bonus shares. That 1 lakh shares partly paid up, still it is partly paid only. Does not become fully paid. So don't consider it. Everybody, that's it, sir. Any other thing asked, sir? No, that's it. All the entries we have done, sir. This one. Whenever right shares are issued, na bank account debit to equity share capital to securities premium. Yesterday we have done right shares topic now. Share capital securities premium. Or else you can write bank to share application. Share application will be transferred to share capital and securities premium. That is also correct. So here, the mark it as important. 11th entry. Dividend, where students will do mistake. How much capital is there on that? This is one entry. And one important entry is this one. How much is the dividend for partly paid shareholders? I think these three are important points, sir. Remaining all I think you can manage. But this question you please see once. Important question, mark it as important. Okay. That's it, sir. This is question number 3. Next in bonus issue illustration number 4, sir. See this illustration number 4. MG Limited was registered on 1st January 2023 with an authorized capital of rupees 3 lakhs divided into 30,000 equity shares of 10 each. During the next 12 months to 31st November 2023, following events occurred which related to the share capital of the company. On January 1st, 2023, sir, the company offered for subscription 10,000 equity shares at a price of 19 rupees each to be paid as follows. Actually, the face value of the share is 10. Now they are offering shares to the public for 19 rupees. So 9 rupees is what, sir? Securities premium. At the date of issuing, including premium, 10. So therefore here premium amount is included in application itself. Hello? Allotment 5 rupees. First and final call 4 rupees allotment. First and final call 5 rupees. So how many shares company is offering to public? 10,000. At what price? 19. So shares are issued at premium. How the amount is collected? Application time 10 rupees. Allotment 4, final call 5. So securities premium is included in which stage? Application stage. Okay. Next. This is happening on 1st January 2023, sir. Next, what happened, you see. On 30th June 2023, the company made right issue on 1-for-2 basis at a 22.5 per share payable in full on 10th July 2023. So right issue company made, sir, for every 2 shares 1 share will be given as right shares. That means how many right shares can you tell me? We are offering 10,000 shares to public, right? 10,000 divided by 2 into 1. 5,000 shares will be right shares. And each share at what price? 22.5. So 5,000 into 22.5 we will collect. In that 5,000 into 10 we will transfer to share capital. Remaining will go to securities premium. No. See, okay. But this point is very important. Next you see, next line, they said only 80% of the issue was subscribed by the shareholders with the payment being made on the due date. Sir, actually we want to give right shares every 2 1 share. That means 5,000. But they subscribed how much? 80% only. So 80% means 4,000, yeah, 4,000. So right shares subscribed 4,000, sir. Next, on 30th November 2023, company decided to make a bonus issue of shares at par by utilizing the entire balance of securities premium account. So company issuing bonus shares, and what they are using? Securities premium. So fully paid bonus shares. At par, bonus shares are issued at par means 1:1 ratio. 1:1 ratio. What they are asking, sir, prepare the equity share capital account and securities premium account of the company for the year ending 31st December 2023. So they are asking us to prepare share capital account as well as securities premium account. So here three things are there. First, public issue 10,000 shares, then right shares, then bonus shares. So three things are there. So we need to prepare what, sir? Equity share capital account as well as securities premium account. So very simple. Illustration number 4, sir. So if I prepare equity share capital account, tell me, sir, if I prepare equity share capital account, sir, in respect of issue of shares, when equity share capital is getting affected, sir, first come to public issue. First application money received, correct now? How much application money is received? 10,000 into 10 rupees. Application stage amount is how much, sir? 10. Hello. So the entry is bank account debit to share application. 10,000 into 10. 1 lakh, 1 lakh. Everybody. But in this 10 rupees, how much is the premium, sir? Company issuing shares at a premium. 9 rupees is the premium. 9 rupees will go to securities premium. 1 rupee will go to share capital. Sir, entry, sir. Bank account debit to share application. 10,000 shares into 19. Correct? 10,000 into 19. Not 10,000 into 10. 10,000 into 10. In that, how much will go to share capital? 10,000 into 1. 10,000 into 9 securities premium. So therefore, here if I write by in equity share capital account by share application account, correct? How much? 10,000 into 10. Sorry, 1. 10,000, correct? Next, if I prepare securities premium account also, how much will go to securities premium? 9. Share application account. 10,000 into 9. 90,000. So first application money received, share application money received, bank account data to share application to share capital to securities premium. So in share capital account by share application 10,000 into 1 rupee, by in the securities premium by share application 9 rupees. 10,000 into 9. So entire share application money was transferred. 10,000 to share capital, 90,000 to securities premium. Correct? Next allotment. Allotment how much? 4 rupees. What is the entry for allotment? First allotment due. What is the entry? Share allotment to share capital. So in share capital we will write by share allotment. Share allotment account. How much? 10,000 into 4 rupees, 40,000. So allotment is done. Next allotment money received. But money received from allotment nowhere to write because we are opening only 2 accounts now. Equity share capital, securities premium. Next, sir. First and final call money due. What is the entry? Share first and final call to share capital. So in share capital by share first and final call. First and final call. 10,000 shares are allotted and the first and final call is 5 rupees. So 50,000, correct? That's it. And then first and final call money received. It will not be recorded in any one of these accounts, so ignore. Next, that's it. Next, right issue. How right issue is done, sir? For every 2, 1 share. In that 80% subscribed. So 4,000. What is the entry? Bank account debit, 2 equity share capital, 2 securities premium. Correct? For right issue, what is the entry, sir? For your understanding, I am writing. For right issue, bank account debit, 2 equity share capital account debit, 2 securities premium. Here, for every 2 shares, 1 share is given. 10,000 shares, sir, divided by 2 into 1. They subscribed 80%, sir. Each share 10 rupees, sir. So 10,000 divided by 2 into 80% into 10. So it will be 40,000. Correct? Sir, if you want to find out number of shares, first find out number of shares. Number of shares will be how much, sir? 4,000, sir. Correct, sir? Right shares, sir. And you are receiving 4,000 into how much amount, sir? 22.5. Correct? So 4,000 into 22.5. How much? 90,000. Everybody, in this, how much will go to equity share capital? 10 rupees. Face value 40,000. Securities premium 4,000 into 12.5. 50,000. That's it. So this is the entry for right issue. So in equity share capital account, we need to credit how much? By bank. What is this? This is right issue. How much we received, sir? How much we credited to share capital? 40,000. And also securities premium by bank. By bank 50,000. Right issue, nothing but. So right issue is also done. Next, bonus issue. Correct? Bonus issue. Bonus issue at par by utilizing the entire balance of securities premium. So bonus issue, sir. Securities premium account debited to bonus to shareholders. Correct? Bonus to shareholders account. Here we are using securities premium account. So can you tell me bonus shares, how many bonus shares will be given, sir? Simple. Originally how many shares, sir? 10,000 plus right shares 4,000. Total 14,000. So 14,000 bonus shares will be given. Because bonus shares are given at par. Existing shares 10,000 issued to public, 4,000 right shares. So total 14. So 14,000 into 10 rupees. How much, sir? 1,40,000. 1,40,000. Securities premium to bonus to shareholders. Next to bonus to shareholders account debit to equity share capital account. How much, sir? 1,40,000. 1,40,000. That's it. Sir, actually entry is not asked, sir. Only directly we need to write. But I am writing entries for your understanding. So in this case, bonus shares are also issued, sir. Bonus shares are issued at par, sir. At par. Already in the company, public 10,000 shares are issued, right shares 4,000, total 14,000. So total 14,000 will be given as bonus shares also. So 14,000 into 10, 1,40,000. So therefore, share capital account is created with 1,40,000. So therefore, here in share capital account, you will write by bonus to shareholders. How much, sir? 1,40,000. So share capital account is created with all the capitals. Say this. Application money, capital portion, allotment money, capital portion, first and final call, capital portion, right issue, capital portion, bonus shares. So total 2,80,000. 2,80,000 is the capital portion. So 2 balance carried down. 2,80,000. This account is done. Similarly, sir, securities premium account total. Securities premium, I think we have used this for bonus issue, right? Securities premium to bonus to shareholders. So securities premium account is debited with bonus to shareholders account 1,40,000. So what is the balance here? I think it tallied. No balance available, right? 1,40,000, 1,40,000. So varietyly they have asked, sir. Share capital account, securities premium account, they have asked and we have recorded. And also, sir, in this question, if you see the second part, this is first part, sir. Second part, if you see, a shareholder who had subscribed initially 140 shares had subsequently taken up 80% of the right issue and then received the bonus shares to which he was entitled. Calculate the ultimate number of shares owned by him and the total price paid by him for these shares. See, there is one shareholder, sir, who has subscribed initially for how many shares, sir? When company went for public issue, he subscribed 140. Next, when company offered right shares, he subscribed 80% of the right offer. Then bonus shares. Now they are asking how many shares that person will have now. We need to calculate. Very simple. How you are going to calculate? Simple. For example, that shareholder, how many shares he had? 140, correct? Now, right shares will be added, correct? Right issue, right shares. Tell me, right shares are offered on what basis? For every 2, 1 share. Correct? So, 140 into 1 by 2. Correct? For every 2, 1 into 80%. 80%. 80% is subscribed. 50, 56. Hello? Now it will be total 196. Correct? Next, bonus issue. Bonus shares. Bonus shares at par. Bonus shares at par, sir. At par. That means already he is having how many shares, sir? 196. Another 196 will be given. 1:1 ratio at par. So therefore his shares will be 196 plus 196. 392. So these are the number of shares held by that person. Okay. Calculation of ultimate number of equity shares owned by shareholder. So that shareholder, how many shares he held? This is the answer. This is number of shares, sir. So he subscribed 140, sir. Right shares are given. We'll add it. Bonus shares 1:1 ratio. We'll add it. 392. They are also asking how much is the total price paid by him. What is the total price paid by him? Tell me. For example, first he purchased 140, na? 140. Hello. 140 shares he has taken, na? What is the total price he paid for this 140 shares? This one. 10, 4, 5, 19 rupees. Each share issued at 19. Hello. So 140 into amount paid. So if I consider in rupees, what is the total amount, sir? 140 into 19 rupees he paid. So cost is 140 into 19. How much? 660. 2,660. Right shares, 56 shares he purchased. Na? Each share at what price? 22.5. So 22.5. So tell me the cost. 56 into 22.5. 1,260. Bonus shares freely. Bonus shares free. So therefore, to purchase first initial 140 shares, he spent 2,660. Next, right shares, he spent 22.5. Bonus shares will get freely. So therefore, the total cost will be 1,260 plus 2,660. It will be 3,920. This is the answer. 3,920. So these are the number of shares ultimately owned by him as well as the cost incurred by him. Sir, you understood? That's it. So this is illustration number 4 we completed, sir. Now, sir, here examination question, only one question is there, sir. That is conditions for issuing bonus shares. We have already discussed, sir, conditions. Those conditions. That's it. So that means we have completed all the questions.